Turn on my camera. And we upgraded the Discord, so we're gonna have a cleaner stream. There we go. We got that 2K. We in 2K mode. Alrighty. How can I share? Can I forward this message? Were you able to figure out your bank stuff? Might want to sign up to, this is just if you wanted to, no pressure from me, you know that, but since oh, you did figure it out, so you're good. Okay, cool. I was gonna say, because then you can upgrade to the annual, which will save you like a month or something off if you upgraded to like the annual one, and then you don't have to worry about all the transactions every month. Gotcha. Let's go over here. Just letting everyone get in here. Gotcha. No worries. But yeah, it's just if in case that you don't want that to happen. That was the other workaround, is like if you do the annual when you do get this one cleared up, so it doesn't happen again on monthly transactions, you can do that. And it's like I said, saves you one monthly payment, saves you 20 bucks. Alrighty. We still got 4 minutes. And then let me get this all pulled up here. We got this fun bit F. Right? That was the one you're talking about? Oh, you made it. Oh, wow. Okay. Well, I would assume based on crypto this weekend, if it doesn't turn around, that it's going to go down. But it all, it's going to come down to what happens. Where's crypto actually? Oh, we're still holding on right there, 68. I mean, we had the quick dump, yeah, but overall, we're still holding. I was expecting us, as long as we don't lose 60, we're Gucci. We're just holding this trend line. You can see it as far as Bitcoin goes, right? Which BitF, you're looking at Bitcoin. So we broke out. We're just retesting. We're writing this line down. That's good. We did the same thing here, as long as we don't lose it. Don't lose it like we lost it here. Okay. Let's go to the higher time frames and check. So we had the weekly crossing last week, which is good. We had the MACD curling here, crossed, so that's good. This is bottomed out. Our volume has not started trending bullish yet. Sorry, tweaked my neck last night. So we want is this freaking downtrend. I mean, we need to break this. Okay, we need to break this downtrend. But we are on a big, heavy, as you can see, support is anywhere in this range, a lot of it, a lot of consolidation. Previous top before we broke through. So this is important. Otherwise, I mean, all right, looking 60 weekly. The good news is the bigger time frames, for the most part, besides monthly, but Weekly has done a pretty good job. What do we have this one? It rejected it. But here, so if we take a look here, right, the MACD is not as far down as it was. So now we're really underextended to the downside. Trying to see last time that we were never this low on the MACD. We've been lower on the stochastic. Let's see, BitF. Man, I would say we're the Tweak brothers, but that's probably not a good name to go by. So crossed over on the weekly again, which is a good sign. MACD curl. I think you're just gonna see a quick drawdown, but I think overall big picture, right, we're gonna go higher. Are you trading it or are you just holding it? What's your game plan with BitF? Or you're trying to figure out getting into it? Like that's a freaking bull flag. Are you trying, like, we're sitting right here on support. Don't you just love that this thing just charts everything for you now? Just amazing. Love it. Everyone else is like, let me draw this line, let me find this, let me find where all the supports are. I'm like, let's just pull it up and it'll do it for us. Gotcha. I mean, you might have a DCA moment Monday and Tuesday, depending on if he has this whole like war shenanigans cleaned up. But it looks like liquidity grab is going to be anywhere in this like 180 range. Like this little whoop. They just sniped all these stop losses. This is exactly what this was. It was all, let me just go take all your money. Let me stop you guys all out of your stuff and then let me recover it all. So anytime you can get close to this, like right under the $2 and this 180 range is a good DCA. Fibonacci's wise, I mean, I imagine that we're below the golden Fibonacci, but we'll double check. Yeah, we're sitting right on the 786. So as close as you can, right under $2. And then the next Fibonacci, if it actually truly like loses this support area right here, would be like the 137 range, which is where all this resistance kind of was before it finally broke through. So, yeah. So right under $2 and 137 would be your next after that if it does go further down. Okay. All right, we're going to hop into this. All right, let's get into it. Welcome, guys. Live stream's recording, so if you guys end up having to leave early, you guys can always fast forward and go to the spot where you left inside of the live stream. It'll be on the YouTube tab, or if you just go to the YouTube, you'll see Chill Investing live stream with today's date. There's a few things. So Elwa, I know, wanted to go over just copying and pasting into the new spreadsheet to transfer data like I had to do. And you don't have to if this isn't the year you want to do that. Just finish out this year with your current spreadsheet. I always start a new spreadsheet every year so I can keep track of my progress every year and look back instead of a continuously going. Any active positions I just carry over. But other than that, I just reset. So here's like an old sheet, right? This is our old spreadsheet, or just the previous version. And what you're going to do is when you copy the new spreadsheet over, this would be blank. So what I will do is this is what it'll look like when you get the new spreadsheet. These are just examples to show you, but all you would do is delete these, okay? And you're just going to copy over what you see. So here's your Control C, just copy over your ticker, right? And then Control Shift V. So it just copies the context or the content instead of, if I just did Control V, it would make it blue and no words. Okay. So you don't want that. You want Control-Shift-V, which will just carry that over. So you have SoFi. All it's going to be for you to copy over all your initial positions, you're going to put set number 1. And sets are just rounds, okay? So for example, this ONDS, right? I did a put at $8, 10 contracts. And then I did a covered call and they were called away. So I got assigned these shares and then I got all my shares called away. That completes, right, the circle of all of my ONDS. I own no more ONDS. So now when I go to make a new ONDS wheel strategy, right, I'm just starting my cycle over again. But since I'm starting at ground 0, it's now going to be my set number 2. So that way it's a separate log. It's not the same log. Does that make sense on what set means? And I'll show you why we do it. Okay, perfect. Okay, so now you have opened cost basis. It's P or C, okay? Just capital P, capital C, so we don't do the put drop down. Expiration date, strike, quantity, premium. So same thing, go to your sheet, opened cost basis, Control C, same thing, opened cost basis, Control Shift V. So there's all those. These you can just put P, and then once you do one and you know they're all puts, just drag that down. It'll just copy it, so it's all P's. Okay. And then expiration, strike, quantity, premium, Control C, Control Shift V. Okay. And this should, oh, because I don't have a set in there. Once you put a set, it'll calculate this, but 1, 1, 1, 1, 1. Okay. And then same thing, you can just copy over. I actually didn't copy this. I just went ahead and did these ones, and then I plugged in the dates. So that's all I'm doing. So now, one sec, let me read the comment. So the spreadsheet is only specific for the wheel strategy. When you buy direct shares, can you use this sheet? Yes, so you can buy direct shares. I'll show you that next part. I just want to show you the copying over. So copy over just like that, Control C, Control Shift V, easy on a computer, won't take very long. It took me probably 10, 15, because once you know what you're copying, I mean, you can just leave all these ones empty and all the P's empty if you want to start and just like copy over the columns and then just go back and plug in. And then I'll show you is your buy and sells down here on the bottom. If you are buying or selling any non-wheel share transactions, you put them here. Okay, so I bought 1,000 shares of ONDS at 7 and I sold 1,000 shares at 9. Non-wheel transactions. And I put them because at the time when I was running the wheel on ONDS, I was putting it on during that same time. I bought these during the same time that wheel was running. So I put it on set number 1. And then once all my shares were gone, I put it on set number 2. And when you go to this wheels tab, you're going to see, okay, ONDS2, it logs all the ONDS2 transactions onto this sheet for you. And then if I go to ONDS1, here's all the ONDS1 transactions. So then you can keep track of each wheel. Okay, this is going to show nothing right now because my cost basis is 0 because there is no we don't have anything. You know, we don't own anything outright. So now if I go to SoFi 1, here's all my SoFi current positions. Okay. If I bought anything, non-share transactions, I would just do SoFi 1, the date, I'll just put today's date, 03/22. I bought them for $17.50 and I bought $5.68, whatever. Okay, these will auto-populate. You don't need to do anything here. And then if I go to that wheel log now, it'll say on 3/2 I bought 568 shares for $17.50 with my invest here. Okay. My original cost basis is $17.50. Okay, based on all the premium I'm going to collect, if I don't close early, if I don't get assigned or whatever, here's the premium. Okay, and then this is my adjusted cost basis. So now I could sell covered calls if once these are all closed, right? Once they're all closed, I can sell covered calls anything above my adjusted cost basis. Okay. Just know anything that you sell your covered call over, like you want to set it for $17.50, but anything below $17.50 eats into your previous profits. So you try not to do that. But in case we go into a bear market or anything, this is what your true break even cost is that you need to set covered calls above. And you would essentially roll to get above this. And we're going to go more into it. I'm just kind of going over the spreadsheet to start. And then you will see, well, what happens if I get assigned? Then what do I do? Because you're only showing me non-wheel transactions. Well, if you get assigned, all you're going to do is drop down, assigned, okay? Obviously, my closing cost is 0 because I got assigned the shares. And we'll just say the expiration date was 3/20. So we'll just say I got these shares, okay? 3/20, go to my wheel log. There they are. You got assigned on 3/20 the 500 shares at 18. My original cost basis is now 1773, and my adjusted cost basis is 1346. Okay, it does everything for you. You just need to plug in the transactions. All the math will make sense for you. You don't have to do it. Cash waiting. No, so this one is more specific, and I can do it to a wheel log, less of portfolio. So that's why I have both. But if you want me to, I can. I can probably get that on there. You want the weighted this part? Hold on, where is it? Portfolio. You want me to do this part onto? I'll have to look where I'd put that. Is that what you're talking about? Okay, your cash weighted section right here. You just plug in your cash to tell you how much percentage of your portfolio is cash. Yep, I can do that. I'll figure out how to put that onto the new one. So don't start your transition over until I fix that. I'll get that for you onto the new one. Alrighty. So does that make sense? So here's monthly. You'll see. So this is monthly performance. Okay, and then this is your P&L. So when you actually close a position, it'll actually track what you've actually collected. This is with all open positions and closed positions. Okay. But this will track what you actually close, whether it was a call, whether it was a put. And then this will track which ticker is performing and how much you've collected per ticker. Okay. Alrighty. Very important to keep track. Okay. It just, it won't make sense if you don't. Unless you just keep it really simple and just say, I bought it for this, I'm selling it for that. Okay. Alrighty. Here's our wheel log. Like I said, inside of paid membership, you have access to view my log entirely like this. You'll see all my transactions, see everything that's active. It'll be green. So you can see where I stand and what I have and if I closed anything and what I closed it for. So you guys have access to that inside of Chill Trades at the top. And I think I put it in the chat inside of Chill Trades. So you will see that. For anyone who has not signed up, and I know a lot of you guys have talked about you guys are going to do it before the March deal is gone, before Founders Club is shut down. I will just show you real quick everything you are going to get, and then we will jump into questions, Q&A, all that kind of stuff. Okay. So right now, all the free stuff, right? We have all the chats. Okay. If you are jumping to the paid, you will get the classroom of education, which depends if you guys have like topics or anything. You guys are more than welcome to shoot me topics, and I will go ahead and like create little note cards. So specifically wheel strategy, like here's step 1. Okay, you can read through these. These are all little notes. Over the weekend, people were talking about the cash position and how much cash I should have. Okay, well, it's all dependent on the VIX. Okay, so here you are. Okay, if the VIX is higher than 30, okay, you should be deploying most of your cash. Okay, if the VIX is slowly going down, you should be building up your cash position. Okay, start taking your wins and start building up your cash to get ready for the next spike of the VIX to 30. Okay, so very helpful. It's helped us during this time. Okay, the whole FOMO, risk management, option Greeks, picking stocks, dollar cost averaging, support resistance. Okay, so you get all these little note cards just to read on. They're quick little things. There's nothing like so crazy. You know, like here's understanding gaps. Okay, just quick little cue cards. Try to explain it as if I'm not like some. I don't. You know, I want to try to explain it in human terms and not some Wikipedia page. You will get stock charts. I don't know if you guys noticed, but here's X charts as well. So I was able to link some X accounts. They don't always post charts, but they do post charts. So here's like Long Investor with Coin. Here's ABCL from another. So these guys I follow, whether or not I believe they're true on every chart, but we look at our own indicator. But sometimes if they see a good setup, we should go look at our indicator and go take a look, right? So he sees ABCL going to like 885. Okay, maybe we should go look at ABCL and go see what we see on our chart, right? That's the goal. Let's take some of these guys that I look at on X and see what they're looking, see if I go to our chart and then see the same thing. Okay. But you will see other charts in here, and you guys can ask for charts if paid members. If you guys ask for charts, we will update charts in here just on request. But without me knowing what everyone is looking at, it's hard for me to go chart it. Right? I don't want to spend hours of charting if no one's looking at that ticker. It doesn't make any sense to me. But you have access to charts. And then you have chill trades, which are my trades. Okay. So a lot of CSPs. You'll see my buys and sells. And then this is specific bots to my watch list that I'm specifically watching. Okay. So whether or not there's bearish momentum or bullish momentum happening. And then we have Gladiator Trades, which he's been doing really well playing the SPY right now. I think last week or the week before he had like 1,000% return on one day. Yep, there it is. Closed for 1,000% return. He's got his swing trades, just restarted his kind of portfolio, so you guys are going to be able to track kind of fresh, which is nice. And then we have our daily bull bots, daily bearish, weekly bullish, weekly bearish. These are just based on the time frame. Monthly bearish, and then purple bots. Okay, which means get the heck out or look into shorting it, which this one was 701 Friday at close. We'd get in Monday. Monday it popped to 780. And then that following week it dropped all the way down to 488. Okay, so that's a good almost $300 drop in the stock price from its high after this alert went out. Okay. So you will gain access to that on top of wheel strategy course inside of Discord or inside of the WAP. And then we're almost done, I promise. I'm just trying to, all this value, just spreading it. Yeah, I'm just trying to show you guys. Okay, so inside of WAP now, guys, you guys have access into this wheel strategy log. So you can use this if you don't want to do a whole spreadsheet. It's not going to give you everything a spreadsheet gives you because a spreadsheet can be more advanced and tracks different sheets and everything. But I did plug it into here just so I can see everything. It does give you your win rate, your open positions. This is what you've collected. This is what's open out there as well. So I have a little bit more sitting out there that I haven't closed because we just opened 10 positions. Or I have 10 positions open. But all you're going to do is a new trade, put the ticker in, SoFi, cash secured put or covered call, select, strike price, 17, how many contracts, the premium you collect, what's your cost basis. If it's a cash secured put, your cost basis is just the strike. If you're doing a covered call, your cost basis is what you own the stock for. So if I own the stock for 10, I'd put $10. The day I opened it, the expiration date, which for most of mine are April 17th. So I just put the date. And then if you haven't closed it, you don't do anything. And if you haven't closed to know exactly what your profit was, you don't put anything. Once you've closed it, you choose the day, or I think if you do closed, it will just auto-populate the date that you plug it in, but you can change that. So you can hit closed, and then whatever your profit was, if it was $1,000, like this would be 1,000, you'd put 1,000. If it's closed it for half, you'd put 500. Okay. And then any notes you want. Hey, this is leading up to earnings. I wanted to close it early. Okay. And then once you hit save, okay, it just right there. Boom. And it shows you open. Now I have 11 open positions. My total premium increased. Here's my win rate. Yep, this is recorded, so you can watch it later. Steeler Dave. So that's just a normal wheel log, and then you can edit it right here just to edit, close it, P&L, or go ahead and delete if you ended up entering it all wrong. And there you go. This should save to your WAP profile, so it's always there. And then we also have our CSP calculator now, okay? Which is just going to be stock price right now, SoFi, I don't know, 17.50, I'll just say. Strike price, 17. Premium, let's just say $1. How many days? If you're on Robinhood, it tells you the days. I don't know why it didn't let me do the calendar, but I'll just say 30 days. Okay, here you go. Cash required to make this trade is $1,700. Max profit is $100. Capital return on your capital, 5.88. Your break-even price, 16, which is what your cost basis would be if you're assigned. This is if the stock goes to zero. I hate this, but the Robinhood does the same thing, but that's your max loss. Stock goes to zero, you lose it all, right? Distance, so meaning the stock needs to drop 2.86% to get below your current strike price. Annualized return would be 71.57, and risk assessment, this is moderate risk, okay? And then the same information is all put here that is right here for you to read, but you have access to this. So if you wanted to plug it in and see exactly how much risk was involved and what your return is, what your annualized return would be, then you would go ahead and just plug it in here and determine whether or not it's a great play for you to be making. Okay, risk is going to be based on distance to strike, what you own it for, and I think they're going based off of delta. So I think delta's like 36 or 38, so it's moderate risk. So that's to you guys. Obviously, you can calculate it inside your spreadsheet if you're using your spreadsheet as well. So up to you, but this is all just inside the WAP. Some people just, because the WAP is an app, right? You could just easily log your wheels log in here instead of going to a spreadsheet, but it's all up to you guys, okay? Just so people have access to it. And I think I am going to put the CSP calculator on the free one as well, so everyone can see it and use it. Chill investing community. There you go. So everyone will have access to that. Okay. Alrighty. Let's dive in. Let's get into it. If you join the paid Trading View indicators, spreadsheet download, wheel strategy course, it will also be included in the full version. Last month to sign up for the $20 locked in price for life. Upgrade to the annual membership if you want, and that will also help you fewer transactions, and I believe saves you 1 month total. And it's retro, so if you just sign up for the annual now, it'll renew now. It's not going to always be January, so there's no like prorating or anything like that. And there might be a little overlap between your monthly and the annual, but it'll overlap a couple days. So this WAP doesn't make it easy for anyone to like just upgrade. You have to just upgrade, and then I need to go in and cancel, but it doesn't issue refunds or anything like that when I do the cancellation. So time as close as you can to your renew date on your monthly if you wanted to upgrade. Okay. And it will save. It saves you 1 month of payment by doing the annual subscription, and that'll be locked in as well, so that doesn't increase on you or anything like that. Alrighty, let's get in. Let's figure out what tab I'm gonna work off of. I wanted to work off of ETF investing a little bit, talk about it. Huey was big into it. I'm gonna call you out. There's a nice tool, backtesting, and what I want to take is that our premium that we make every month, guys, and I'm going to go over the new indicator update and get into things, and if you guys have questions, put it in the chat, and we will go over them as well, okay? I want to take a portion of premium every month and put it into growth ETFs. I'm not putting it into boring, stable ETFs, okay, to an extent. But I'm trying to figure out the best package. Based in the US, I can't do the Canadian ETFs or anything like that. What's your guys' thoughts? So here's kind of my thought process. Here's a couple. These aren't the ones I'm doing, all of them. Here's a couple of them. We have the VU. I don't know why I put VU and SPY. Maybe I meant to do QQQ on this one. And delete QQQ down here, I think. Yeah. So there's VU. QQQ, SPMO, QQQI for income, GPIQ, which is income and growth, SCHG, SCHG, and VXUS for all international. What other two would you guys say, ETF wise, are the ones that you guys look at that you would do that are different, that track differently than these ones? Is there anything else? You're going to say crypto or something, I'm sure, but these are all fairly growth. SCHD is a dividend. These are high income payouts. Do you guys have anything else you guys typically use, or just put no in there and that's perfectly fine? Because I'm trying to figure out the best way, because I think there is this very strong way to compound doing this. Okay, putting 10% of your, I think it's 10% is the right answer. 10% of the premium you make goes into an ETF, a growth ETF. Okay. So let's just go, if you did 100% VU, let's do a portfolio if you did 100% QQQ. And what I think I'm going to do is a 50% SPMO and 50% QQQI. And I'm actually going to, I don't do international long-term thinking, like we're going to outpace them. But you could throw some international in there. Okay. Analyze my portfolio. Okay. And let's scroll down here. So based on 10,000 starting balance, okay, our best year was 20, or this is the SPY. Let me just change the names. SPY, QQQ, chill. Make it easy for us. All right, here we go. So the QQQ outpaces the SPY. That's typical. But the worst years can be way worse, right? Negative 1.14 versus still a positive 0.62. And then ours is going to be at 22.59, but negative 0.11 on the worst year. Okay. Maximum drawdown is not far off than just doing the SPY. Okay. 0.2%. But we get a positive 5% on the best years. Okay. This also pays, QQQI pays a dividend of 14% annual, but it pays it out monthly. So you do get a monthly income from it if you wanted to use it. I would put it back into it and drip and then build that up. Okay. QQQI is one of the most tax beneficial income ETFs as well. Let me just go here and scroll down. Risk to return. Hold on. Annual returns. Where is, okay, here we are. Balance. I'm trying to see where it tells me my like long term. Anyway. They started hiding things a little harder on here. Like, where am I at in 10 years from now? Oh, this is why. I gotta edit. What do you guys want to go over, by the way? We'll go over it. I just want to show you guys compounding, but that's it. Here it is, settings. Yes. 10,000 cash flow, contribute fixed amount. 1,000. Oh, it's probably because the QQQI only has 1 year under its 2 years under its belt. Yeah, it's just gonna come in from ours. We ended up like $300-400 higher based on that. Okay, well here, starting balance 0. 30 years is what I'm going with. So, or what would you guys say your guys' time frame is, and we'll take a look at that too. I think it's 15% annual contribution. 10% of your I think your return rate is going to be roughly 15% to 18% with this portfolio. But how many years, and what would you guys consider for you guys? What would you say you guys can contribute monthly? So 20 years, okay? And what would you say contribute monthly? Let's see, 500 bucks. All right. $655,000. 20 years, $500 a month. Roughly with this portfolio. Okay. 655. That's only at $500 a month. We could generate, I'm not saying 500 small, but I'm just saying like with your compounding of your other portfolio and just putting your 500 bucks of premium every month into this can generate you 655, and that's starting from 0. And that's with 15. I think the SPMO over the course of the past 5 years, and we'll look at it. If I just do this, it's significantly higher. It beats out the SPY and the QQQ. Okay, here it is. The best year. Look at best year 45%, worst year -10%. Their worst year -32, -18. Yet their best year was close to the QQQ's best year. Okay. Where is it? And SPMO has just started kicking off. Like they've fixed their algorithm to get you the best. So a lot of compounding. 15 years, $500 a month of your premium. That's all I'm going to do. I'm just going to do whatever my premium is. I'm going to do 10% of whatever my premium is. Okay. So, right, you make $5,000 a month in premium times 10%. That's going to be your $500 a month. Okay. And then the compounding happens. What do you think that number jumps to at 30 years? Let's just say 30. 655. Anyone want to take a guess? 655 in 20 years. What does it turn to in 30 years? No guesses? 1.2? Anyone else? All right. We're going with 1.2. 2.8. Power of compounding, just 10 more years, took your 600 to 2.8. So, doesn't take a whole lot, just takes a little bit of time, but consistently just contributing 500. So Robinhood does it where they have a constant, a reoccurring investment, and that's what I'm going to do. I'm going to set that up. So that way there's always a minimum, like you said. 500 bucks, that might be my minimum where I have to do it, whether or not I was able to generate the premium, but I have to do it. And that'll set us up so that way a portion of your account is good to go, right? You don't have to worry about losing everything because of all your individual stocks dumping, right? You got to have some sort of small safety net, but that small safety net of $500 a month, 20 years, 30 years, turns into millions. Okay. So that's what we're going to start. I'm going to put it into our, into the account, Robinhood account with me, but we're going to go ahead and jump in to, what do you guys, anything specific? Do you guys want to go over the stock, or you guys want to go over some wheel strategy? What do you guys want to go over? And we'll go over it. Okay. As far as the indicator goes, guys, the update you will see, and you won't see all of these, but you're going to see next to the Chill Master Elite name, there will be a purple refresh. If we ever put an update out there, there will be a little purple refresh button right next to it. I don't know if I have any that have a refresh that I haven't refreshed already on any. I'm just trying to see if there's any of them. I don't think so. Refresh? No. Okay. So, but the update allows you to have, okay, support and resistance already on the chart without having to actually go find support and resistance. Okay. So you can pull up any chart and you're going to see it. All you're going to do is, if you don't want to see this support and resistance, okay, you're just going to go ahead and hit this box. Boom. Well, you got to take this one off. Show levels, labels off, and then show support and resistance. And if it doesn't go away, I got to fix the code. Yep, I got to fix the code. That's embarrassing. I'll fix it. But if you guys want to see your year-to-date VWAP, okay, there's your year-to-date VWAP. Guess what? It bounced right off of it. It does it. It's proven to be a very solid support resistance level, support, and then we lost it. Back test, can't beat it, right? And now we're up here, bounced off of it. So year-to-date VWAP, okay, that is one. Volume weighted average price, I believe. And I'll double check myself before I wreck myself. All right. Volume weighted average price. Use traders determine average price of a stock has traded throughout the day, weighted by volume. It acts as a trend confirmation tool, helping to identify intraday market sentiment. If the price is above the VWAP, it's generally bullish, and below it is bearish. Okay. So you will have access. You have access to that. You just go ahead and hit this, show it. Okay. And then it populates, and that's going to be based on the year-to-date price action. Okay. That's all it's going to run off of. And then if you want to use any sort of moving average, you now have access to using 1, 2, 3, 4, and 5 weighted moving averages, or just moving averages. And you can choose EMA, SMA, WMA, HMA, RMA. I typically just use EMAs and then a WMA 1 week. So these are the ones I typically use, and then whether or not you guys want to change any of it, that's up to you. And if you prefer using a standard moving average versus our bull bear line, you can. But I like using our bull bear line. It's proven, as you can see, it's sitting right on our bull bear line, which is not just a standard moving average. It is a 200-day moving average with a smoothing SMA of 50. So it's got a slight offset to any other moving average you would use. And that's because typically on the 200-day just standard moving average, market makers know you want to set your stop loss there or just slightly below it. Okay. And what we want to do is prevent market makers from coming to take your money. So typically when someone loses the 200-day, they're like, oh my gosh, I got to sell. And the goal is to have a slight offset to that so that doesn't happen. But you don't have to use it. If you don't want to use it, just use a normal moving average and just remove your show bull bear lines. Okay. And anyone who doesn't know as far as the indicator goes, okay, we typically, what we like to do is we like to buy on our diamonds, which obviously on a big day of 6%, 10% up in a day, be careful of buying on the diamond, right? Because the next couple days, you'll probably get the pullback. Big day, right? And then pulled back. And now we can take this diamond, right? Not as big of a diamond day. Okay. And then we got to sell. And then we got to buy. Okay. Didn't get a sell up here. But I think for me, if I see a big jump like this, it's tough not to want to take some profit. And the reason you didn't get a sell is because it wasn't truly undervalued, right? Or overvalued. You never got a pink. But easily could have taken that win with 2 days, 3 days probably of getting into it. 2 days, up 36%. Okay, take some profits. But yeah. I typically like a 10% on yellows, 25% buy on your green. Figure out what your total amount you want to invest in. So if I wanted to buy, bit F, I would say I want $5,000 worth. I would buy 10% here and then 25% here and 25% here, trim, buy. So that's how you go about it. Diamonds are your signals of bullish momentum, green and yellow, and then orange and red diamonds are your bearish momentum. Okay, so nice and easy. Try not to overthink. It's nothing too overly, I think, complicated. Try to keep it as simple as can be. And then this is our Momentum Elite, which is going to be a histogram of momentum. And whether or not you guys want to use the other one where it's just the lines instead of the histogram, you can. But if you are a free version of TradingView, you want to use Momentum Elite and you want to use Master Elite. Okay, these are the best ones for the free version of TradingView because this is a MACD line. This is the Williams percentage momentum line histogram. And then we also have bullish and bearish divergence tags on it. So there's 3 types of momentums all in one indicator. And then this one is just one momentum. Then you got to use the MACD, which is 2 momentums. Stochastic is a 3 momentum. Volume. And this is basically all of these 3 is this. So if you have the free version, use the Momentum Elite. Okay. But we try to make it easy to be able to pull up any chart and really understand what you should be doing on this chart and what you should not be doing. Okay. If we go take a look at a lot of charts, guys, I mean, everything is fairly, like, ONDS is not super undervalued, I would say. Like, you're just in the neutral zone. But you got earnings, you got a lot of momentum for drones and everything. The chart that typically this is, typically breaks out to the upside. Based on the trend lines it's drawn for us, this type of triangle tends to break out to the upside. Okay? Doesn't typically break out to the downside. But we got earnings, you got a war, you got drone activity. So I would say ONDS is set up fairly well for this kind of market right now, but still be cautious. It's not one of the most undervalued companies. Okay. Wheel strategy. So if you want to, on the wheel strategy, you can use the Master Elite 2, which is our Bollinger Bands right here. Let me get rid of all this. Okay. Okay. To understand where the true bottom could be for running the wheel strategy and whether or not to know if you should be taking this risk of ONDS, right? You would look at also the weekly time frame. Okay. And I know a couple wheel strategists that basically only work off of the weekly, but they have very active lives, meaning, they work nonstop for pretty much 3 weeks and then, or 3 weeks or 2.5 weeks, and then have a week and a half off. And that week and a half is when they're setting themselves up to not look at the market for the next 2 to 3 weeks. So they use the weekly time frame just because they need more time. They can't look at these dailies. Okay. So what you'd look at is the weekly, and the weekly for ONDS is down here in the 4s, and we're not even at the bottom band. Okay. So they wouldn't do a chart like this. Okay. If we can be more active, then daily is perfectly fine. Okay. But if you wanted to look at the weekly, and an example of one that looks good on the weekly, right, is SoFi. We're down here at the bottom. We're down here on a support line, and we can do CSPs all we want down here. Okay. This is why I don't have tons of ONDS CSPs. I have more SoFi CSPs right now. Another one we have is Iren and Cypher, and if you look at those, weekly is catching up. This weekly used to be down here in these 13s, and now it's at 25, which is where there's a gap fill at 25. So I do think 25 is possible. But I'm happy owning Iren. I'm happy with the premiums they're paying out. But you can look at the weekly, okay? Just to protect yourself. Just know where, I guess, worst case it could fall to. And if you're happy, or if you're not happy, but if you understand that and you still want to make your trade, then go ahead. Another one down here at the bottom, I'm assuming, is Soundhound, but it's still curling down, so I don't love that. Don't love that. Okay. But it is sitting, as you can see, it held its bottom. It's holding it, but we're going to see on Monday's open what this does, because I think down here, man, if we see it somewhere in these low 5s and 4s, it's going to be real hard not to buy Soundhound. So, all right. What's Elwa Subs? You guys got any questions? Because then I'm gonna jump into the basics of the wheel and questions you have. Any positions you guys have or questions of wheels or premiums? As far as the war goes, guys, okay, we've said it. The second a tweet, a text, anything goes out that the war is over, okay, you will not catch that momentum fast enough. Yeah, how's your are you're up in Nibius, down in Nibius? Um, but yeah, as soon as he puts the tweet, text, whatever it may be, it's a good time to buy. The market will rally like nonstop. Okay. So I'm doing the CSPs because if it doesn't stop and we keep going down or whatever, we can roll and keep our strike and just collect a little bit more premium, give up a little bit more time, make some money on our capital. Okay. But at the second that text, the tweet goes out, that war is over, the rally then begins. Okay. So I think that he's looking for a way to back out of this war, but he does not want it to look like we are giving up. He wants to make it look like a win, which is fair, right? And we know this because it's just the same playbook constantly with him. Very nice, up 3% on Nibius. Yeah, I think a lot of people are calling out. You can see it hit the top of the weekly resistance band here, and rejected our support resistance. I don't know your real name, Dog, so I'm just gonna call you Dog unless you put your name in the chat. So we just kind of got started, went over a lot of things that are in the community, but I can go over anything else if you have questions, and then go over the basics of the wheel strategies. I missed a chunk of it. I think so. For me, the right, like you're saying, Sat L, we missed the big chunk of that move. Well, the big move. Where is it? Why am I missing it? Okay. Yeah, I am I like, oh man, I could have made more money. Absolutely, could have made more money. Okay, but you can see actually the bands were getting tight too. You can see that, right? Bands getting tight. Dog. It's gonna take a second to get used to. Means that a big move is coming. But they announced the dilution, so it should have gone down, right? So we made the right move, especially with the market, especially with the day we were having, right? I wanted to take those gains off the table. So this is the part where I say you can't FOMO. Okay, you're not allowed to FOMO. We don't FOMO in this group. Right? We had this. We did the right thing. I think I'd still stick to my play with taking the capital because I was able to distribute that capital now into plays that took a deeper dive into this market. Sat L, I mean, we're gonna see how it does on Monday. If it keeps continuing the rally, I'll be very interested. But I think it's really weird, and they've been doing great on earnings and showing the progress they're making. But I would say, like I said, that it's very speculative, new, low micro cap, low. It's a 500,000, right? And we got billion-dollar companies struggling, even though these companies like Rocket Lab just got their largest contract and went down 6%. So I'm not quite sure why this happened, especially with them diluting shareholders. It makes a whole lot, doesn't make a whole lot of sense. Okay. Rocket Lab is where I thought I should now put my money because this band is tight and we're at the bottom of this band here. Okay. Hey, Kevin, welcome in. Our charting tools that you guys will have, by the way, everything you see on this chart is auto-populated. Didn't do anything. Okay. You have access to it. You'll have access to it. And basically how it works is these blue and yellow lines are support and resistance. So we're sitting on a support here. If we lose support fully here, okay, we could see Rocket Labs drop down here. This trend line is also auto-populated, okay? So you can quickly look at a chart and see, okay, where, I don't know why an arrow just drew, where it would fall to our support and our trend line here, okay, if we were to lose this. Okay, and as we bounce up, we should start seeing some selling take place here. Okay, we get our diamonds, which are our buys or dollar cost average in. Okay, so let me just do this. Let me take the Bollinger Band off so you don't see it. Okay, so green diamonds, we like to buy a little heavier than we see yellows, but typically, so you get a little buy here, and a couple times in between these, you were up. Okay, you were up pretty good in these. But Green diamond, buy. We had a nice little trim, sell. Okay. Same thing, you got your buys here, and then you can follow the diamonds. But all these are bullish momentum signals and then bearish momentum signals. Some people like to just wait for the red diamonds and green diamonds. You can do that. And then the color coding for you guys is when a stock is more undervalued and overvalued. So light green, you're entering the buy zone. Yellow is the add zone. Neon green is like buy zone. Okay. Not entering buy zone, the buy zone. Yellow, we're still an add. Gray zone is neutral. So you can feel neutral. Like you're not overvalued and you're not undervalued. But I typically ignore diamonds on gray zones because it's not an extremely good opportunity, but it's an opportunity in itself. So it's up to you, but I typically don't follow gray zones. So you would get a trim here and then a sell here and then gray zone and gray zone. So nothing has told us that Rocket Lab is super undervalued, and that's true because it has more room to fall, right? Um, and then I mean another perfect example has been Rocket Labs. Here's a little buy, light green, and then we shot up. Okay, you might get a dip, but typically, like I said, dollar cost average at these yellows. D, and then buy, sell, buy, gray zone, sell, buy, no sells yet. ASTS has a lot of momentum for it. So, but it makes plugging in a chart fairly simple. You can see kind of what's going on right off the bat, and then you can switch. So there's a full strategy to it, but that's the simple, like just seeing it. The color coding, the more green, the more undervalued, the more red, the more overvalued it has become. And we don't chase, right? We're not buying these diamonds. This is when we should be looking to sell. We should be looking to be buying on these diamonds. Buys, buys, buys. Okay. Hopefully that helps. I think I can put this up here. There you go. Buy, trim, sell, add. Okay. So you'll have access to this indicator. You don't have to upgrade TradingView to use this indicator. You will have access to this. Okay. It also allows you, don't need to look at all the coding. You'll also have access so you can see, what is it? Bull bear line, which is ours. As long as it maintains over this blue line, we stay on the daily time frame. Below this blue line, we switch to the weekly time frame. Okay. And I can show you a perfect example of HIMS, right? Okay. Based on the daily time frame, and once it was below this blue line, it kept telling you to buy, right? Well, it's super undervalued, so it's going to tell you to buy on the daily time frame all the time. So when it crosses over here, we switch to the weekly, and the only weekly diamond we got was till the news came out to buy. So now we're interested in buying HIMS. Okay. So that's how that works. Daily, which works by trim, add, gray, you don't have to, but trim, add, buy, sell, add, sell, buy, trim, sell, add, trim, sell. Okay. We can look at a bunch of them and it'll show. Obviously, you can't invest into newspaper companies or something like that where obviously you got to pick at least a decent company, but overall, it'll show you the path kind of to take. NVO, monthly time frame as of right now is what we're waiting on. If we go to monthly time frame, purple means get the hell out of Dodge. Okay, there's your purple. Get the heck out. It's overvalued. It'll drop. Just give it a second. Okay. Have we had some outliers? Yeah, Palantir is an outlier of a company that just kept going, came overvalued and just kept going. Everyone probably has a story about Palantir, and everyone wishes they held. Some of you did. Congratulations. You're the real MVP, you know? So you will have access. This is the part where you don't have to rely on my charts, my buy alerts, or anything like that, because you have access to look at companies that you truly like and see where they're at on undervalued, overvalued, and whether or not you have some bullish indicators happening. Okay, so no strategy is ever 100% win rate, and I will never claim 100% win rate. Okay, but the strategy wins more than it loses, significantly more. Okay. We've done well with ONDS. I mean, weekly buy under the blue. There you go. Here's your purple. Get the hell out. There it is. Drops down to 5. So you go to 11, go to 5. We're above the blue, so now we'll switch to the daily time frame. There's your ad. Trim, trim, sell. There's your ad, and you've gone up a couple times now from 9 to 12 or 9 to 11s, and you could sell anytime if you wanted to, right? You're still your own portfolio. You don't have to just rely on diamonds only. If you see that the market, whatever, and you're saying I'm up in my position, take your wins. We don't have any problem taking small wins. Small wins stack up quick. Okay. So for Kevin and Dog being some of the new members here, just wanted to kind of show you that. You don't have to have the upgraded trading view. And once I click out right here, you're going to see a lot of indicators. Don't get overwhelmed. Free trading view allows you 2 indicators. Okay. This is one indicator you will use, not this one. This one indicator. Okay. This whole thing, you get all of these little things in one indicator, including multiple moving averages, year-to-date VWAP, which is volume weighted average price. Okay. And it acts like a bullish, bearish situation. When it's under it, it's bearish. When it's over it, it's bullish. And it acts as support and resistance. Or if you like certain moving averages, which we like the 200 weekly weighted moving average, is like phenomenal deals. Anytime your company that you love is at that price or jumps below that price, it's usually an amazing opportunity. For example, Microsoft. Okay. This is why I say like ONDS is not an amazing opportunity, is because the moving averages are all in the 3s and 4s and 5s. Doesn't mean there's not a play to be made, but it's not an amazing opportunity. Microsoft, for example. Okay. Doesn't happen very often, but when it does, drops below this red line. Okay. Here's your April moment below the red line. Amazing opportunity. Okay. Here it is back in 2022. Amazing opportunity. Okay. And then it takes a while to ever see it really below. There it is. Back in 2012 was the previous time below that. 200 weekly weighted moving average is a phenomenal long-term buying opportunity. Okay. And the reason why I'm loading up on SoFi, right now we're doing CSPs, but if it gets to the red line, which is going to be $15, okay, if it gets to that, you will see me outright buy the shares because the opportunities don't happen very often, right? There's 1 or 2 days in April that it touched the red line. Okay, I'm just going to go ahead and give you my money. I'm not even going to ask any questions. You can just take it, and I will sit here patiently waiting. Okay, so once I see anything close to this red line, 15s, take it. Take my money. Okay. HIMS rejected the 200, right? We went below it. We got our weekly buy signal down here, came up, right? We're fighting this resistance, and then we rejected because there's a gap down here. I assume that we touch maybe 1950 would be like my thought process for HIMS before we go higher. Okay, as you guys know, I'm loaded up on HIMS, love HIMS. I got no problems with HIMS. So super bullish on them. I hopefully HIMS and SoFi just send me to retirement. That's the goals. But again, indicator helps us, tells us everything. Wheel strategy for the basics. Okay. Dog and Kevin, I know you guys know maybe some. I don't know the extent of how much you know about it, but the wheel strategy is generating income. Okay. Simple terms. You say, for me, right? I could say right now, I would buy SoFi for 15. I can sign a contract and somebody will pay me to sign that contract to say I will buy it. So if you ever said like, oh, when this company gets to this price, I'm going to buy it. Okay, well, you can sign a contract and someone will pay you up front to do that, to do exactly what you just said you would do. You can get paid for that. So, and I'll pull it up and I'll show you. Okay. I'm going to try to keep it as simple as possible. Hold on. Let me load that off screen real quick. And I'm going to pull up SoFi. I think you said you're a SoFi bull. Maybe one of you. I can't remember. All right, so let's take a look at SoFi. So right now, we could trade SoFi options, and all you're going to do is you're going to sell a contract. Okay, and picture yourself like an insurance broker. Okay, you pay somebody every month. This is called premium, this little column. Every month, you pay your insurance company, car insurance, whatever you want to be. You pay a monthly premium for them to insure your car, your home, whatever it may be. You don't even use the insurance, yet every month you pay them. Okay, well, this is the same exact thing. I'm going to offer somebody insurance on SoFi, right? So they're basically paying me for insurance. And what I'm saying is, if the stock is below 15 on whatever date I choose, we'll just choose April 17th, okay? If the stock is below 15 on SoFi on April 17th, that person paid me their right to sell me those shares at 15. If the stock is, I'm going to go extreme, if the stock is $12, they paid me to have insurance to sell that stock at 15. That's all it was, is insurance. They paid me for insurance. So I don't know why, oh, there's 15. So let's go to sell put. All we're going to do is sell. We're selling options. Okay, we're selling insurance. And they are going to pay me 53 cents a share up front to sign this contract. And all I'm going to do is get to buy SoFi for $15, which I already want to do. And they're going to pay me up front to do that. Or, so there's two scenarios that happen. Okay. On April 17th, the stock is above 15. Okay. There's only two scenarios, nothing else. Because if you start thinking of other things, you're going to like make it more difficult in your head than it already like could be. Okay. So stock above 15 on April 17th, I just keep the 53 cents a share and I don't get the shares. I don't buy them. I get my money back, my collateral back, and I keep the 53 cents a share because you paid your insurance company whether or not you use it. Whether or not you use your insurance, you still paid them. You don't get your premium back for car insurance, right? Same thing. I get to keep my 53 cents that they paid me, and I don't have to buy the shares. If the stock is below 15, let's just say it's $14.50, you have to pay $15 for those shares. But you still get to keep 53 cents in premium. Okay. Oh, well, Colby, I could have bought it for $14.50. Well, yes, you could have, but the stock also, you would have had to like picture this, right? The day the stock drops to 15, would you have bought the stock then, or would you have been like, oh, it can go to $14.50? You probably would have just bought it at the 15 that you said you would buy it for anyway. So it doesn't matter, right? The hindsight's always going to be 20/20 on the day of, but you just got paid to buy a company. And so now you have more capital than you initially had to start. Okay. The second half of that wheel. Okay. I'm going to pull up the little thing I have here. Okay. The second part of the wheel. Same way we said you can get paid to buy stock. Well, you can get paid to sell your stock. Okay. So step one, which is what we just did, was called a cash secured put. You sell cash secured puts. That's step one, which is what we just did. We said we'll buy SoFi for $15 on April 17th if it is below it. Okay. Next step. Okay. Well, technically 1A, 1B, whatever there's a part 2 inside of 1 and 2. Okay. Next step, you're waiting. So like I said, if the stock is above 15 and you don't get the shares, guess what? You go back to step number 1. Okay. But if you do, its stock is below 15, okay, you get assigned. Now you move to step number 2. Okay. So if you didn't end up getting SoFi stock at 15 or it wasn't below it and you didn't get the shares, you just do this again until you eventually get some shares. Okay. So that's all we do. Now, I currently have the 18 and 17. I haven't done the 15s because if it gets to 15, I just want to buy it. I don't want to risk not getting it. Okay. So now, step number 2, selling. Okay, let's just say you have 1,000 shares of SoFi right now. I don't know, 1,000 shares of SoFi right now, and the stock is currently 17. Okay, Well, now I can do this and sell a call. I will sell my shares of SoFi on April 17th for, choose a day. This is not right. They're not calculating right because it's the weekend. But anyway, just an example. Okay. It's 17. I will sell my SoFi on April 17th if the stock is above 18. Okay. And in advance, they're going to pay you 76 cents in advance. So I just click this. I have 1,000 shares. Okay. So every contract is 100. So I can do 10 contracts because 10 times 100 is 1,000. So in advance right now, if I had a bill, something to pay, whatever it may be, you needed cash right now, and you're like, I don't want to sell my stock, but I like need money, right? You can sign a contract saying I will sell SoFi for $18 on April 17th if the stock is above 18. In advance, they will give you 76 cents a share to do this, to sign the contract. So all I'm going to do, sign this contract. They're going to go ahead and deposit $760 into my account right as I sign this contract, and I can use that as I please. Stock, two options, two things can happen on April 17th. The stock is above 18, I have to sell my shares for 18. If the stock is below 18, I keep my shares and I keep the $760 that they paid me. Okay. Dog Kevin, does that make sense? A lot of people will say, what's the downside? Downside is it goes to zero, just like you were if you bought it, right? If you were to just buy shares and the stock went to zero, yeah, you'd lose your money. Same way you would do it if you bought it. But this is the safest way to buy stock. Okay. Awesome, Kevin. Awesome, dog. It's the safest way to buy stock because if the stock goes against you, and an example in the Discord, we had one go against us, EOSE, right? EOS. Okay. It went against us. The CEO was very misleading and did not give investors a heads up going into earnings or in advance that, our numbers might not be where we want them, but we're still going to get to the target, right? There was nothing. They just blindsided everybody on earnings, and I don't trust that guy ever again in my life. I will never invest in his company. Which I know he's not heartbroken, but I'm a little heartbroken. But what I will say is the stock dropped 50%. Our cash secured put, right? If we just wanted to back out and say, I don't want to be part of this company anymore, instead of it being a 50% drop, when it's a cash secured put, it's almost half. So it was about a 25% loss of our capital instead of a 50% loss. So if you just bought the shares because you're like, oh, earnings is going to be so good, and then it dropped 50%, you'd be down 50%. If you think earnings is going to be good, CSP, and it drops, you're down half of what it would have dropped. So CSPs can be safer to protect yourself. You can buy time. So there are things like rolling options, okay? And you will see it in my account here. I'm sure it'll show down just because of the red on where's my stuff. There it is. So for example, here is IREN. Let's just say you didn't want to buy IREN quite yet. You're like, oh man, I'm not sure about this. IREN, looks like it needs a little bit more time to consolidate. And you still want to make some capital, right? You still want to make some premium with your money. So all we're going to do is you can roll. You can kick a can, the simple term, kick a can down the road. How many of you guys have done that or said that? It's a standard term. We all kick the can down the road, right? I don't want to do laundry right now. I want to do it tomorrow. I'm going to kick the can down the road. Okay, well, instead of buying it on April 17th for $40, I could buy it on May 15th. And guess what? They're going to pay me $2 a share. You always want to roll to a credit, but they're going to pay me $2 more a share to wait to buy it for the same price I was going to buy it for in April, but 28 days later. So now I just picked up $2 extra per share to wait 30 days, to wait 30 days more. Okay, that's $2 a share you just made. And all you're going to do is buy the stock for the same price, potentially buy the stock for the same price, right? Because if by May it's above 40, you don't buy the stock. Below it, you buy it for 40, the same price you're already going to buy it for. Let's not overcomplicate, guys. We can make money, $2 a share, compound it. Okay, so when we look at this, and I will pull up my log here for IREN, okay, active, okay, we're making a 10% return buying IREN for 40. Okay, I don't know. The stock is currently held very strong, and data centers are definitely bullish. Long-term power, energy, data centers, right? Bullish. Overall, we are bullish. Obviously, there's macros involved for everything, but in general, the sector is bullish. Okay, I'm okay buying it, and the current price is $41.29, so I still get to buy it for cheaper than it is right this second. Okay. But while I wait to potentially buy the stock, I'm making 10% on my capital. Well, let's do this every 29 days and we will make 127% annual return. And all I got to do is be right 12, 11 times out of the year. And we can get to 127% return. And we didn't even buy the company. We just tried to buy a company. Okay? That's what we're shooting for. We're waiting for companies to land on support, strong support levels, and we are going to go ahead and place a CSP. If we see some buy diamonds, okay, wait for your red day, place a CSP. Now, there's other strategies where we can definitely maximize our return. You can go ahead and put this capital to work right away. Okay, and what did I say I'm going to do? I'm going to take 10% of my capital, I'm going to put it into growth ETFs. Okay, every time I get 10% of premium or whatever the premium is and take 10% of that premium and put it into a growth ETF, that will compound over the years of doing this. And then you have your little safety net of compounding happening on the side. Okay, so set ourselves up for long term while we're doing some short term stuff. Okay, like I said, no more than 45 days. Okay, I did a 49 day heading into the weekend, knowing that 2 days would fall off, right? So 45 days or less, theta really kicks in and starts eating away at those contracts, which is helpful to us. Now, when you buy contracts, theta decay sucks. It's eating your money. Theta decay is paying us. Okay, so that's what we want. 45 days or less is when theta truly kicks in, and that's why we set those days not to be longer than that. Now, if you don't want to manage it as often, you will see people, and there's other strategies out there where they do 60 days. Sometimes they do a whole year out. Sometimes they do 2 years out. I don't play that game, but when you get to a large sum of money in your account, you can play that game because you don't need to make as big of a annual return to make a lot of money, right? You got millions and millions of dollars. You only need a 10% return on the year and you're happy, right? You don't have to work anymore. So, any questions? This is all in the wheel strategy course as well on our WAP. We have the log. You know, there's a lot, but I can answer any questions. I can make any video of any questions you guys have. Any questions? And you guys can play it safe. Okay, I'm playing it aggressive right now because companies are so undervalued. Right? Like they're already super undervalued, so I want to go ahead if the stock market decides to rally based on the war ending, right? It decides to rally, I don't want to miss out on, you know, a good chunk of gain. I'll be able to close these early if we wanted to, but meaning like I don't want to take a 3% return right now when the company is so undervalued already that it's not likely to go further down to get to where like that strike price would be. And if the rally be turned up, I would only get a 3% return. But if it turns up, I still get my 10% return, right? Which I'm fine with. And then we can play again. But right now, the companies are just so undervalued that I'm willing to pay at their current price, but I still want somebody to pay me to buy the company. I don't want to just outright give my money and sit here and, you know, and not collect anything. I can get paid to wait. I see you typing, Kev. I'm ready. Fire away. Yeah. So rolling out. Okay. There's a couple things to think of. Why are you rolling out? Right? Is it because the war's still going on? Is it because they just had earnings and you want to give them more time? So there's a couple things to think of, right? Like when do you see the market turning, and you want to make sure you get assigned right before the market turns, right? Which you can roll again. There's constant rolling. Now in your account, it will look like a loss, and I can show you in my account. I just transferred to Robinhood, which sucks because um, it doesn't track my year to date from Fidelity over to Robinhood, um, which sucks. I hate looking at it because it's like to me right now it's telling me like I suck, and I'm like, no, you didn't see the good trades in Fidelity before I came. Let me just show you what it looks like. Actually, I can also show you in our log dashboard. Okay, here. I rolled. Okay, and it said, "Oh, you lost $8,000." Well, that's not true. Okay. All it was, and let me go to this log now. Let me go to hymns. There it is. Okay, here's hymns. Okay, I rolled, and I rolled. When did I do this? February 27th. I rolled out to 6/18. So I rolled out roughly 3 months, 4 months. 4 months. I rolled out 4 months. And the reason for that was I was trying to figure out where is it? Sorry, let me plug this 12. I was trying to figure out how far I had to roll out to keep my price but collect money. Okay, you always want to roll to a credit. Always. Don't pay to make a move unless the pay is like a penny, right? Like I'll pay $10 to make my situation better. Yes. But majority I'm not paying to make anything because a company can turn around any moment, okay? Just like hymns, right? So I have a hymns one at $27. This was before when it was at 27 and then it dropped to 15. So I rolled it. Okay, and I had to roll out for credit. I had to go out 4 months. Then the stock went up 50%, right, in one day. So then I rolled it again, but I rolled it instead of it expiring in whatever, June, July. I'm terrible with months. Anyway, I rolled it back 2 months. And then I moved it up. I'm crazy, guys. I'm crazy. I rolled it up to 30 because it gave me a credit. So I was able to scoot 2 months off of my time frame. I had to go up $3 and strike, but I got a credit. So they paid me more, but I had to move my strike up, which, okay, I'm bullish on hymns. I think that the rally before April, if the war ends, can easily blow past $30. Okay. It's got the largest short. It can squeeze like no other. Okay. So I don't have a problem with 30. And the reason also being is if I decide that, okay, maybe I do need to roll till May, I'll just roll till May for 30, right? You just keep this thing moving. So I always roll to a credit, and it's not so much the time frame. It's just as long as I have a credit, I will roll it. Okay. So for example, let's just say you wanted to, this is Iran. If I wanted to roll till May, right? And I'm like, well, I want to buy it for 34. Okay. And I go to 34 in May and it shows a debit of 50 cents. Well, guess what? I need to decide whether or not I want to buy it for 34 or do I want to buy it in May? Because if I want to buy it in May, I need to roll it to 36 for a credit of 20 cents. Okay. But if I just want to own it for 34, I need to go out to probably June. Oops, I don't know why I clicked on that. So I need to go to June. Okay. And I want to buy it for 34. There. Now I can get a credit of $1, but I have to buy it in June instead of May. Okay. Does that make sense? That's how I decide. I either need to decide whether it's a date I care about or the price I care about. Okay? Because if it's just the date and I didn't care if I still bought it for 40, you can roll out as little and as far as you want. They'll pay me $2 to keep the same strike and just roll out a different day. Okay? But if I care about the strike, then the date needs to move to get me that strike for a credit. Does that make sense, Kevin? Took you the long way around. Just, yeah, it's just, again, you're given, and if I look at these, let's just, I don't know, an example. Well, I guess continuously rolling for a credit, as long as it's a company you believe in long term. I don't do this with any company I don't believe in long term. Okay. Your credit right there of the 10% on your capital is already the S&P 500's average return on capital in one CSP. Okay. And all I had to do was buy IREN for the current price it was as normal, and then on top of that I got my 10% return. So, like, when I look at it that way, and if you think about it that way, you're like, okay, so I already did the S&P 500 in one trade, and all I'm doing is buying the company I want to buy for the price I want to buy it for, right? Like, don't try to do anything. Like, people get so caught up in, like, oh, I need to find the 1,000% return stock. I don't need to find that. If it happens, it happens. No one's timing, by the way, the 1,000% returns. It just happens to be that they bought it and the stock kept going, right? Like, you're not going to always find, and it's very rare that you find the 1,000% returners. And most of the time, those that are part of those 1,000% returners have been sitting in the stock for years, and it just started its moment. It now is having its euphoria moment in the market, right? But they sat through tons of pain. You don't realize what these people go through to be in these moments, okay? Now, what was the next thing I was going to go over? And you guys can ask more questions down in there, and I can go over whatever you want to know. Or if there's a position, I'm happy to give you my ideas. Sorry, somebody just sent a question via direct suggestion. Wheel strategy log, can you add puts and calls for the wheel strategy leaps? So, oh yeah, to maximize your return. Okay. Now, if you are bullish long term, right, take that premium and put it to work right away. Okay. And what do I mean by this? What people will do is they will take this premium. So, for example, okay, on this trade for IREN that we're in, okay, collected $2,000 in premium for 29 days. Okay. I can take that, what did I say? $2,000. Okay. And let me get off this roll. There it is. I can take that $2,000 and let's buy a leap. Let's go put that money to work. Because if that stock decides and the war decides to end and we just rally, and let's just remove the war from the scenario because we're not always in a war, but in general, you're buying this company and doing a cash secured put because the company is undervalued, right? This is why we choose certain stocks, is because it's currently undervalued and we'd love to buy it if it even goes on a bigger sale. So, therefore, I should take that capital and I should put it to work in this company. So in case it does go off, we aren't stuck just making our 5-10% in premium. We also put that premium to work. So when it goes up, that premium is now gaining even more. So you take your 2,000 premium and you can turn that 2,000 premium into 2,500 premium or 3,000 premium, or however much it goes. So all you do is you go to view options, or if you want less risk, take your 2,000 and buy $2,000 worth of the shares right then and there. Okay. Because typically when we do a CSP, it's also a red day. So the stock should be down that day. So it's probably a good time to buy also. Okay. But you would just buy a call and you can go out to January 2028 and you could go ahead with $2,000. You could buy a 42 strike. There it is. $2,000. I can buy this saying buy whatever this is, January 2028, as long as it's over technically on the expiration date, $62. But I will show you one thing. We'll just go to simulate returns. I think we can do, if I add this to a watch list, view watch list, we can take a look at this right now. I don't know, what did I do? I clicked the 40. What was I thinking? 42. Okay. I can show you what the returns would be, so we can go ahead and see what you turn that $2,000 to quickly. I think most people, I would say minimum, are seeing IREN by the end of the year at, I would say analysts and X enthusiasts are all saying somewhere between $80 and $100. Okay, by the end of the year, or the rally sometime in this year they expect it. Okay, but we can simulate returns. So let's just say you bought the one contract. Okay, and let's say by, well, let me just type in. Let's just say the $80. Oh, can't type it. Okay, I just gotta. What are you doing? What are you doing to me? Are you frozen? It froze. Oh, wait. We'll give it a second while that loads. But we can turn this into bigger money. Okay. While it loads. We broke it. Maybe they're giving me social. I hope it's Robinhood Social. Kevin, what brokerage do you guys use? E-Trade? Okay. I've used E-Trade once. I just switched to Robinhood. I was with Fidelity for a good chunk. So let me go to my wait or watch list of the option. Let's go see if we can re-simulate these. Watch list. If you want to see my specific watch list, it's on Chill Trades as well, so you guys can see that list. IREN 42. Simulate our returns. Simulate returns. Okay, hopefully you don't freeze on me this time. I think it's a simulate returns thing. It's not doing any of this until I'm on that page. Anyway, well, long story short, it goes up. You'll continue to make more money with your premium and not miss out on much. Obviously, it goes down, but you have till January 2028, so a lot of time can happen, right? So the likelihood of it over the course of 2 years of going straight down or not getting over that price is very little, I would say. Price per, let me select this. This is another website you can use to kind of get an idea. Let's just say you bought it. One contract. Let's say the stock was 40 and it goes as high as 100. Okay, calculate. Alrighty, so let's say by August, September, we'll just say anytime before December, this would be the case. It gets to 80. Where is it? You made an extra $729 with just your $2,000 in capital. It gets to 80 by December. If it gets to 80 well before then, it can be 3,000. So you just put that capital to work. No worries. Enjoy your day. So you put your capital to work and your premium made more. You used capital you didn't even have to start with, right? You got all your capital back because you didn't even buy the shares for 40 because the stock went up to 80 before. And now instead of $2,000 in premium, you could have somewhere in the $3,000. So we just like to put our other capital to work. You could just buy shares, so that way you don't have a time frame on anything, which obviously the gain won't be as large, but it's less risk. So our goal is always long-term outlook. Any questions, Kev? Anything about the indicator? Anything you want to see that what comes with the full membership? Anything like that? I can go over. We're talking about compounding, putting that money, 10% of your premium into an ETF, growth ETF. Doing that and turning that premium into a long-term compound machine is my goal. That I'm starting. I'll put the 10% from January. I'm going to start it this year so I can keep track of that. But I can do a tour around the community. I can do a tour on the indicators. Whatever you want. Help you guys out. I'm going to go over the video. It'll all be recorded so anyone else can see what you're asking for. Man, Friday was a sale day. We did a lot of trades on Friday. I still have 10% cash right now as far as my cash position goes. I think 10% sounds right. Sorry, somebody just sent me a separate question in messages. No. Scar. All right. No, wasn't about the live stream questions. Alrighty. Inside of your indicator, you will have the Bollinger Bands, which is what you would use for running the wheel strategy as well. Have you worked with the Bollinger Band ever before, Kevin? Okay. So it's a rubber band is how we view it. I'm going to get off SoFi right in our hymns, but let's go to SoFi. It's just the daily time frame. So when you're at the bottom of a band, and a lot of people will use the weekly if you don't want to have to think too much on it, but I use the daily time frame Bollinger Band. So we're at the bottom of the daily Bollinger Band is when I like to set CSPs and at a good support level. So currently SoFi, we're at a very strong support level, previous high. I would say in some other moving averages we have at 15. So could it drop a little bit? Yes, absolutely. Anything could. But I would say we're at a very low point in SoFi with tremendous opportunity to the upside. But when you're at the bottom of the Bollinger Band is when you want to set cash secured puts. You want to be trying to buy the stock. So you do CSPs. Okay. Typically, the bottom of the band helps you determine your strike price. But when you are doing the option chain, you want to look at a 30 delta. Okay. Hopefully, Robinhood is done messing with me. Let's see. SoFi. Have you messed too much with options or the like deltas and everything like that, or no? Okay, cool. So typically we do a 30 delta. So all you're going to do is you're going to go to sell, put, typically 45 days or less. I prefer the third Friday because that's the monthly expiration dates. So right now would be April 17th. And we choose a 30 delta, which would be somewhere between the $16 strike and the $15 strike. So you would pick, we'll just say 34 delta. So you'd pick the 81 cents. Based on the chart, the Bollinger Band is already saying 1646 is really the bottom. So buying it for anywhere 16 would put us right here and in a good chunk of this support level. Okay. So, and then when you're at the top, and you want to wait for red days. Red days are the days to do CSPs, which is why Friday we were doing tons of them. Just because the premiums get juicier on red days for CSPs. Now, covered calls, you'd wait till it gets to the top half of the band. It'd be a green day, and you do a 30 delta going the other way. Okay, so all you do is you'd go to here, and instead of sell put for us, it'd be sell call, and you go to a 30 delta, which would be roughly $19 strike price, and you'd collect your premium. But you'd want a green day, top half of the band, 30 delta. Okay. When it comes to a different brokerage like E-Trade, Fidelity, Schwab, okay, the option chain is going to look a little different. I have Fidelity, so let me just pull that up. I have Fidelity because of a health savings account, so I have to still use it, which is fine. I like some of the data they give me more than what Robinhood provides, but Robinhood charges way less in option contracts, so I had to switch. All right, so when we go to the option chain here, this is how Fidelity looks. Okay, but you choose your expiration date. Okay, it's going to pull up the option chain. Okay, and this says sell and buy. Well, sell is the bid. Okay, so yours just might say bid. That means sell. You might have to put a little note somewhere on your phone. I always have to remind myself, but bid is sell, ask is buy. So what you're going to do is you would do the bid, okay? And this is on the put side, so I'm selling a put, okay, at 16. How it actually reads is, oh, well, I don't know why. Okay, health savings account, sure. Sell 16. It switches. I don't know why it does that. Okay. but it'll say sell to open. Okay, that is opening, right? We're selling the contract and we're opening a position. That's all. Okay. Now, if you wanted to close a position, it'd be the opposite. It's buy to close because we're buying it back after we just sold it. So we're selling contracts. It's like the opposite of what most people do. So that's why it feels a little weird. And then if you are trying to buy shares, it's a put. And if you're trying to sell your shares, it's a call. Okay. Expiration date, pick your strike price. Okay. When you are selling the contracts, your goal is to get as high of a premium as you can get. When you are closing a contract, okay, you want the lowest premium you can give because that is the amount of money, that contract, when you are closing it, the amount of money you have to give back. Okay. And when I go into my, right now this year so far, when I go into these strategies, I'm looking at average of 11% return, and I'm looking at an average of holding it for 38 days as of right now. That's how I've entered every trade on average. Okay. But what do I normally do? Okay. I actually am only getting a 3.5% return, but my average days I hold it is 7 days. So I don't hold it for 38 days. I typically hold it for 7 as of right now through this chop market, right? Because on the chop market right now, we're getting these random spikes of 20% or whatever in like 2 days on a lot of stocks. And we go ahead and we just close our position. And then guess what? 2 days later, Fridays, the stocks plummet. Guess what? We set the CSP again at the same thing we just closed it for, right? The same exact strike, same exact option, but we're just collecting a little bit more premium on the swings. So we're just swing trading, which ultimately is, but we're doing it in the safest way possible, right? Like if it goes down, we can still adjust our strike price. We can adjust the expiration date. We can protect ourselves. But if it goes up, we can still capitalize on that money. Okay. So that's what we've been doing. But our annualized profit, even though I only do it for 7 days and only collect 3.5, if I can do this constantly, is 300% annual return, where typically 38 days, 11% is 106% annual return. So I'm on track to do it, but I'm doing it obviously much faster. But I allow ourselves to have flexibility to maneuver and protect our capital and to adjust our capital to the best that we can. Okay. So if I go to, for example, Iran, like I've opened and closed. So closed early. So here, where is it? So I opened this on 3. Is this still open? No. I opened this on 3/5, the 40 strike at $5.20. Okay. Then Iran popped and I closed it for 3.15. Okay. So I kept 1,000 and I gave back 1,500. But then that was on 3/16. 3 days later, after I closed it, I opened the same one, the 40, on the same date, but I opened it for $4.05. So I was able to capture about a, what is that, 90 cents more premium in just same contract. Nothing changed. I signed the same contract, but 3 days later, I was able to capture an extra 90 cents more a share in premium because of that little swing. But ultimately, I've been on the same contract, 40, 40. I did some 35s before, and I've done the 38. Okay. And all of them I've just been closing early. 1 day held, 5 days held, 17, 11. Just been closing them early, collecting the premium, because it's just been chop. We've just been chopping, taking wins as they come. Right now is not a time to just kind of sit back on your wins and let them turn to losses. So is that anything not making sense, Kev? My goal, typically, my minimum premium I will take is an annual return of 36%. Minimum. That is the minimum premium I will collect. I don't even really like doing them, but I will. And a lot of that times happens when I am like going to go away and I don't have time to like look at the market as much, is because I can set the strike pretty like low or high and collect a 3% return, because no one's mad at an annual return of your portfolio at 36%. The SPY can't even do it. to constantly, like consistently. It can do it in 1 year, but it consistently can't, right? So compounding on freaking 36% minimum, not 30 years. I know I'm not going to do it for 30 years consistent, but 36%, I would say, let's just say 10 years, $500 a month. It's like 400,000 on 60 grand if you just contribute $500 a month in 10 years. Starting, if you have like 20,000, yeah, 830,000. And we've had some big wins just buying and holding. So do you pick the strike or the delta? So delta helps you determine your risk of the strike. So for me right now, with how much everything has pulled back, I am willing to be a little bit more risky with my delta. Okay. So when I look at it right now, I have on SoFi. Okay. Well, this was before when it was like just under 19 or 18. So it was somewhere in there, like close to this price. So it wasn't 60 at the time, and I'm sure these are probably slightly off because of the weekend. But so default is 30 delta. Okay. So by default, roughly, I should be looking at 16. Okay. Now, risky is going to be closer to your 40 deltas. This is considered risky. Okay. And then 20 is considered safe. So those are your kind of like three markers: 40 delta, 30 delta, 20 delta. Okay. Default is in the 30, risky is 40, safe is 20. And it's not that it's risky, it's that you're setting yourself up. 40 delta it's not risky. It's just setting yourself up to most likely get the shares. So it's like, no, I want these shares. I really want these shares. So let me go 40. Okay. 30 default, you're like, I could live with or without the shares. Okay. And then 20 is like, I prefer not to get them, but at that price, I'll take them. Okay. So that's the deltas. Now, for me right now, like I was saying, with the war in the current situation that we're in, okay, if I'm looking at these prices right now and I see we are sitting at a very strong support for SoFi, I'm willing to do currently at the money strikes because I think it's already stupid undervalued and I want the shares, but I want to get paid for these shares. So I'm willing to do at the money. So if it's 1750, I'm doing, I think it was 1750 something and it was red, and I was like, let me just do 18 because I want these shares. I love SoFi. And I'm not worried about SoFi a year from now, 6 years from now, 10 years from now. I'm not worried about them. I love them. I bank with them. I love Noto. They do the right thing. They underpromise, overdeliver every time. Noto has incentives this year. SoFi has the S&P 500 inclusion always on the table right now for the company. So I am a big SoFi fan. So I'm willing to do at the money. Data centers, okay, IREN. It's not super undervalued, okay, but if I look at the chart, okay, we've been holding this area. Typically when we dip, we very rarely hold this area right here, this 36, 35s. So what I was thinking was, okay, let me go ahead and do the 40 because I am more likely to get the shares. Okay. I'm more likely to get the shares. I'm getting $4 in premium, right? That puts me at a break even of 36, which puts me for my first buy of IREN, because I don't own any, right? My starting position puts me right here in this dip zone. Okay. So that's where that puts me. And I'm okay owning my first set of shares to buy IREN in this range, right? My break even price. Okay. Also, it's already pulled back a significant amount from its high. Okay. We've pulled back. We're currently sitting back at 46% pullback. The bottom dip, obviously not including after hours, dipped to 29 for whatever reason on their earnings, but 56% pullback. Okay, so we're somewhere in this 50% pullback range, and it doesn't make sense because we're super bullish. Data centers are great. They have IREN's the largest like grid access to power at the moment from data centers perspectives, and I'm okay owning IREN at 40. As long as you're okay owning the stock for the strike price you choose, there should be no problem, right? I should have no problem wanting to do it because if I want to own it for 40, why wouldn't I do it, right? So for me right now, with everything being undervalued for the most part, like for me right now, I'm not doing Nibius. Like it's up here, right? It's not at the bottom of the band. If I was doing it, I would wait for it to be somewhere in this like 80s range, and then I would be doing some CSPs. Okay, as you can see, buy, trim, and we haven't gotten our trim yet. But and I think we had people in the group do covered calls when it got up here and sell some. They were very happy, made some good money. I think APLD for me, like this has way more room to fall, like down to 21. And so I'm willing to wait for it to get closer to there. But if I look at IREN, here's the bottom of the band is 38. Okay. So my premium, my break even, everything puts me right there. Okay. But I want the likelihood of the shares for IREN. So does that help you understand a little bit how I kind of like my thought process? 30 delta, and then do you want the shares? Are you okay to live with it? And then I don't really want it, but I would if it was that price at 20 delta. I would definitely take it. Okay. But again, I want my capital making a good return in general. Like I still want a 3% return on my money. So that's my thought. ASTS. I've done well with ASTS and Rocket Lab. They're my biggest wins this year. Okay. So I'm a huge fan. I want them, but I don't want them at these prices. Like could have bought one, could have bought it went up, but I want it to follow the trend line that our thing auto charts. Okay. If we go back, it's probably the weekly time frame. Well, anyway, I guess it's not. This typically touches this Bollinger Band. Okay. It hasn't been touching it. It hasn't touched it. And if we go and pull up, I think it follows the it's the 100-day moving average that it follows. Yeah. So if let me remove the Bollinger Bands. Okay. Maybe it's the 200. Hold on. There's a moving average it tends to follow. Okay. Well, typically it does dip under this 100 and tries to come pretty close to this 200-day, which it just hasn't. And therefore, it's just really hasn't been part of like, I'm not willing to take a risk on it right now unless I saw it come down to its normal touch zone, because what it normally touches, it will normally touch again. So I will wait. I will be patient. I won't FOMO. There's plenty of stocks. Rocket Lab, same thing. It's holding its 100, but typically on a really good opportunity that we've been buying, it touches the 200-day. I will wait for the 200-day. Just be patient. Just move on. Move on to a different stock. We were in SAT-L the other day, okay? Because we got the buy alert, okay? We were in it. We didn't capitalize. We didn't get all of it, but we got a good chunk. We'll take it, okay? In this market, little wins are okay, but we were part of it. That's the important part. But guess what? It's sitting on the 200-day where it consolidated for a whole year right here, and it was below. It was at the bottom of this consolidation, and on the 200-day, that's what I'm looking for, okay? Now PGY is way down, way down. SoFi, way down. Look at PGY, way down. But this is because rate cuts are off the table. This is going, when rate cuts are back on the table. Again, I don't try to get too much in politics, but basically when Trump puts his guy that already basically in my mind has already signed a contract that he is going to cut rates. PGY is back to. I think this is going to be a monster. Have you heard of PGY, Kev? Yeah, moment's coming. PGY is, so basically what happens is when banks get loan applications and they decline it, it goes to a back end, which is PGY, which is I it's AI, but it's AI loan processing, risk management, and they go, no, you should go ahead and give this person a shot. But I'm sure they don't give us the whole business model, but I'm sure that the business model is because my background, I was in a dealership for 8 years. I worked a sales manager, salesperson, a little bit of finance, and on the service side at a dealership. So I know the business fairly well. So for loan platforms, typically when I can't get an approval for somebody at a car dealership, it typically gets put to the backside to someone in the back. You call them and they say, okay, they qualify, but the interest rate is stupid, right? So typically SoFi would offer 5%. But if it goes to PGY, that interest rate is probably going to be 15, 16% to offset that risk. But PGY does believe based on that percentage, this loan is worth giving out. Okay. So they're kind of a backstop for banks to just kind of like stop denying good candidates because you didn't look deep enough into what the person's potential is. Um, they carry 3% of the risk, PGY. So they're not holding all these loans that they're approving, but they get paid on loan transactions, right? The loans that they approve and the person follows through, they get paid. Okay. Well, when the rates get dropped to 1, 2%, whatever it's going to get dropped to, but it's going to get dropped significantly when Powell's out and the new guy's in and starts sweet talking their way and starts getting on whatever Trump's agenda is. This guy pushes for it. Rate cuts are going to drop like that. Okay. PGY, loan processing and everything. And they're not just with SoFi. SoFi's their biggest, like, new bank up and coming. Like that's who they're like push. But I think they're with Bank of America. Like they're with some big names. They're not. I think they're with Ally Financial. Like they're not just some small company. Like they are a small company, but they have big names behind them. And when loan processing picks up, when those interest rates cut, just like this was when interest rates were getting cut, and that April rally began. That was a 400% return. We were there. Okay. Well, we're getting that same opportunity. When rate cuts are back on the table and interest rates drop, you will see this company explode right back up. Okay. But rate cuts have to be on the table. That's why it's still going down, but it's finding the bottom. The bottom, it's had the lows of ever. It's right back to it. So we're bullish on PGY. I started a CSP, but guess what? I did at the money because it's already near its bottom. I'm not going to try to time the bottom with a CSP. I'm pretty much wouldn't get the shares, right? But I do want the shares because I do think rate cuts are coming, and the company's not going out of business whatsoever. And they've hit earnings the past 4 times, so nothing wrong with their earnings. But yet year to date they're down 50%. Okay, 1 year price target average by analysts is 27.60. Okay, but rate cuts, and no one's talking. The reason that it's down, everyone's like, "There's no rate cuts happening this year." Okay, well, there will be rate cuts. Okay, whether it's they say one rate cut, and I make a joke. I'm like, yeah, but that one rate cut for Trump is going to be a 3% rate cut. They're like they're going to cut it big because he's been saying cut rates, cut rates, cut rates because we want to refinance all of our debt in the U.S. or whatever. And people who own homes that can't get out of homes because they got such a low interest rate can't move, even though they've outgrown those buildings. People who have high interest rates can't afford their mortgage anymore. So they need the rates to be cut so everyone can refinance, relocate, open some homes for sale, and get movement happening. So that's what he's going to do. That's what I think is going to happen. And I think PGY will greatly benefit. SoFi will greatly benefit from it. So I'm loading up. And financial sector is by far the furthest one down hit this year. So I'm loading the boat on financials and watching for that rotation of money to find where money is kind of moving into. You can go to, I'll put the link in the chat if you want to copy it. Ow. But here you go. This is State Street's individual sector ETFs. And you can see energy this year to date, is leading by far. Okay. Financials are hit the hardest right now. Consumer discretionaries, healthcare, right? So this is where you can see. Yeah, me too. I'm renting right now. I signed a 2-year contract almost a year ago. I don't know, maybe half a year ago. Because of this scenario. And if I have to, I will just pay to get out of my lease and then just build or buy or whatever. But I'm waiting for rates to get dropped like that. And if they implement, which I think he's trying to do, where people will be able to transfer their interest rate, that'll be a game changer in the housing market. Did you hear about that? Um, so super excited. But yeah, have this link. You can always look at what sectors, and if you click on it, you'll see what their top holdings are and everything like that. Yeah, they talked about if you have a home loan, you will be able to the same way, right? Like if you sell your house, you don't pay capital gains if you were to put that money into a house 6 months later or within 6 months, something like that. It's going to be the same thing, I think, with the interest rate. Is they're saying like, okay, you have a 3.2%. You can use that 3.2% on your new home as long as you buy a new home within 6 months, whatever it may be. That interest rate can transfer to your next home. We'll see. We'll see how that gets done, but that is in the works. And I hope that happens because I will just go buy a condo just to have the rate, and then I will just wait to buy a home or do whatever later down the road to transfer it. But I think that's how you stop the housing market from having this interest rate and slow down. But I know that can cause other issues, right? You fix something over here and it messes with something over here. But I think that would be a huge benefit, especially with houses just continuously going up. Um, but yeah, this is where you can see. This is why I'm kind of like going into the financials more into SoFi. I've been a SoFi bull for a while, Hims bull for a while, Archer Aviation for a while. Unfortunately, they just can't seem to get going. But I'm waiting for that defense vehicle that they're building to come up. Did you see inside? Were you here when I was going over the WAP access and what's in the community? Okay. So you found the Discord and I'm assuming you've used WAP before or know like how to be inside of WAP. Perfect. So inside WAP, if you have questions, there's a how-to as far as like how to sign up for Discord, and if you want to become an affiliate as far as getting paid monthly, you can do that. So there are step-by-step processes in here, and then I just post just for people profits. There's just a little gallery of people's profits that they've been taking, so it's been good. And then there is a CSP calculator. So just if you wanted to plug your stuff in, current stock price will just say SoFi like 17.50. We want to buy it at 17. The premium is $1, 30 days out. Okay. Cash required. Here's your max profit, return on capital, what your break even would be, which is the same thing as your cost basis, but there, annualized return, strike to distance, and your risk assessment. Okay. So just like a quick, easy, plug it in, see if it's something good, see if you like the return on capital. Easy. Then you also have the same thing that we have our spreadsheet for. If you don't want to use a spreadsheet and don't want to do all that and just want to be able to plug it into an app on like WAP, inside WAP, you can do that. We have the wheel log right here. So this is where you can see our total premium, the total P&L that we've collected so far. We still have 10 open positions, so that's why it doesn't show it in the P&L. See what your win rate. That's it. It's a simple one, but it's meant to be easy, just on the phone. As well, you'll have access. So when you, if you do upgrade to the full version, you will have this full access Discord. So you'll just go ahead and claim it. Your name will be green if you sign up for the Founders Club this month. But if you wait till next month, when price increase, then you will have a blue name. Blue name is for the full chill members. Dave is back. And then to claim your indicators for TradingView, all you're going to do is you'll go to this little TradingView Elite Indicators button. You will get all of these indicators right here. Okay. You'll just put your TradingView name and then update and then claim indicators. You'll go to TradingView. You'll refresh your screen on TradingView. It's Dave. I'm here to help everyone. Okay. Here to help answer questions. and then you refresh, and then you have access to all the indicators. And then inside of here, there are tutorials, basically how to set up your chart, how to each indicator works if you had questions on which part of the indicator, okay? As well as like how we used it, why I'm buying Archer. Obviously, that one didn't work out. I'm still in it. It's not that it hasn't worked out. It just hasn't worked out yet. But and then selling Rocket Lab, and why I sold it at like 87. Okay, it went up a little higher. I know that, but why you'll see in the video like what I was reading. As well as our spreadsheet tracker. I got to make a new video for the new tracker, but you do have access to the original one and then the new version that I now use one as well. And then learning the wheel strategy, you have access to wheel strategy courses. And if there's any issues, I'm here to help answer any questions if something didn't make sense. So that's everything inside the WAP. Now inside of the Discord, there's even more. Okay. Inside the Discord, you have, so you see everything up here, I believe, on the free version. All of this you see. Membership, admin, content, community. Okay. What you don't see is that we have a classroom, which has ETF investing, how stop losses work, Fibonacci extensions, how you can tell where the stock is going to go based on Fibonacci's. So that's a lot of fun. I love doing Fibonacci's, how to know where things are going to pull back to and where you can find support levels. So if you zoom in here, you can see that it came down, bounced, okay, rejected, came down here, bounced, came down here, bounced, okay, came down, bounced, came down, bounced. So it just finds these Fibonacci levels and their support and resistance levels. So Fibonacci's are always fun to learn. Gaps, wash sales, trend lines, support resistance, all of that stuff. And then we have charts. Okay. So X charts is just people on X that I follow that tend to post pretty good charts. And then what I do is I look at those charts and I look at our indicator and I see if we kind of see the same thing. If I see the same thing that he sees, that's like double confirmation. We're good to rock and roll. It just helps have another brain in the game, But sometimes it's just news. But here's another one. This guy's talking about coin. Believes that we found the bottom with Fibonacci and is looking for like an 800 target. But he's thinking like it's going to happen over the course of the next year or 2 years. But that's 400%, right? So just some good ones to look at. Here's ABCL. If you're a fan of ABCL, he has a target of like $8. I believe it's currently in the threes. So we just go look at our indicator and see if momentum is building up. And then if you guys, paid members, have like questions and wanted to wanted to see like an Archer chart or Rivian chart or anything like that, you can go ahead and message inside the chat, just like others were asking about TEM. And so we uploaded our chart. We see that it is in a wedge right here. We see that the MACD is curling. Our momentum is reset. This white line, when it comes down to this green line, means that the momentum has reset. And now we're just waiting for this little purple to cross over. MACD, stochastic. Everything is bottomed and starting to kind of curl. So it looks like a pretty decent time to kind of load up on TEM. Okay, that's on the weekly time frame. So till takes a little bit of time. Then you'll see chill trades, which are all my trades, whether or not I buy them or open them or close them. Okay. You can also see inside my spreadsheet here, see all the buys and sells and closes and see my log. Then we have bots. Okay. So how do these bots work? It's our indicator. So our indicator, right, flashes a green or yellow diamond for buying alerts, basically. I can't say buy alert, right? Don't want to get sued. But our momentum alert, bullish momentum, has flipped. Okay, here you go. This was the same thing. See on 319, right? It said 328 buy SAT L. Okay, well, if we go to SAT L, let's pull up the indicator. On 319, there's the little diamond. So it said momentum flipped. So it said to buy it somewhere at 319, right here. Okay, and the following day, on the 20th, it shot up to 415, 416. It went up $1. Okay, so there's these. Now, again, they're not just the diamond and you just buy all of it. No, they're still dollar cost average in diamonds. Okay, because sometimes 2 days later shots up. This one didn't shoot up, trickled down, got another one, and then it shot up. Okay, so not every single one's going to be a shot to the sky, but it is bullish momentum is building, so you should dollar cost average into it around this time. Okay. And then you have the same thing, bearish momentum. It means an orange diamond or a red diamond populated. Okay, it tells you the weekly or the daily time frame, so you know which time frame to look at. Typically, a weekly is it like a bigger move, or like it takes longer to play out, but it's more like listen to me, because it's the big picture, right? We see big picture bearishness happening on the weekly. So, then we have another analyst in here. It's up to you whether or not you follow. He's more into option trading, okay? Which allows you basically to, again, he does not tell you to close positions every time. So he is an analyst. He finds great opportunities, okay? Great opportunities, but it is, he doesn't tell you position sizing or anything like that. But here's an example. He bought, I think this on the 9th, he bought a SPY contract, and he bought it at, it looks like 55 cents. And typically I messaged him because typically when he enters a trade, it says BTO. But he didn't do it this time. So I was like, hey, did you get into this? But he did. It was up 100% at 3:20 p.m. He was up. He entered the trade at 10:30 a.m. He was up 100% by 3:20 p.m. And then by 3:34 p.m., what is that? 13 minutes later, he was up 1,000% on his day trade. Okay. So, but he doesn't typically tell you to get out. So if you are up in a position, okay, be aware to take it. He's not going to tell you to. Okay. But he is telling you what he's getting into. Okay, so those are his like day trade or short-term trades is what I would. He likes the term day trade. I prefer short-term trades because he does mix it up with a couple like week-long ones. And then if you want to swing trades, long trades, like he has a HIMS 35 call option for January 2028 that he bought for 1280. Okay, at this day he was red on it. So if you can buy the same option for cheaper, then cool, great opportunity, right? He's in it. So if you're bullish on HIMS. Now for me, how do I follow him? If I see something like SoFi, he is bullish on SoFi for April 17th. Okay. I don't know if he's still in it. Like I said, he doesn't tell you his sells, but I'm a SoFi bull. So I will probably follow that trade because I already like that company. So he must see something on that company that I already like. Let me go ahead and jump on. I jumped on it. It was 12% return the following day, and I took my win and walked away. So you gain access to that. And then you have all of our bots, which is a watch list of about almost 1,000 stocks. I think it's 800 and something. And you would have access to all the daily bullishness. So basically at the end of each day, this will post whatever stocks got a bullish diamond that day. Okay. So you can see at the end of the day, you're home, you got your toilet time, whatever. You just go on there, see, okay, I don't like any of those names, move on. Now you're done. Like you ultimately don't have to do anything until you see a name that you like pop up on this, right? Like you're like, oh, okay, I finally saw Apple had a bullish diamond. I'll buy some Apple today. Like you could almost just not even think about investing and just like look at the alerts. And then you see a daily bearish and you're like, oh, okay, Apple said to sell some today. Okay, I'll sell some today. Something like that. How often do I get on live streaming? I'm alive every day though. No, I try to do twice a week unless something randomly populates and I just can't make it. But typically I try to do Sundays and Wednesdays. Are my typical days. And then just real quick, I'm almost done, I promise. Weekly bullish, so these are going to be all the weekly time frames. Weekly bearish, so these are all the bearish weekly time frames. Monthly bullish, so if it's monthly, right? This is bullish. Monthly bearish, same thing. And then all purple. Like I said, purple for me is get the hell out of Dodge. Let me sell everything because it will be cheaper. You just got to give it a second, okay?
And I can use Iren would be one that I can use for an example. Okay. Is it going to time the top? Not always, but it sure enough protects you from falling. Okay. So you sold somewhere in these 60s. Okay. And now you're getting to buy it again back in the 40s and 30s. Cool. And is everyone okay with that? Like, let's just, I get it. Companies can continue to move and move and move, but very rarely does it get past a purple. Okay. A good one, an NVO, like this will tell you this will warn you. Okay. Here's a monthly. There it is. Here's your purple. So I, I just, purple just means for me, I'm okay walking away. If it continues to go, just wasn't meant to be. I just not willing to risk the downfall of what could happen after a purple. Okay. So you will get those alerts to know if anything happened or any purples populated. Light was the last purple we got since we put out these alerts. Okay. Here it is. Okay. Our alert came in at 7:01. Okay. And typically you make the trade the following day, right? At the end of the day, it tells us all the alerts. Then the next day you can make a trade, right? This gave the alert at 7:01. Right now you're asking, hey, Colby, it's 7:06, dummy, right? Well, yes, it's 7:06 now. Yes, dealer enjoying it. It's showing 7:06 now, but what it doesn't show you is that our alert came in at 7:01. The Monday, because that alert came in that Friday, that Monday, Nvidia announced a $2 billion investment into them, and it shot to 787. Okay, and let me go to the weekly just to show you a little bit. Maybe the daily will show a little bit better. Where's the? Okay, here it is. So the purple candle 701, somewhere on this wick right here, was the end of the month. Yeah, February 27th. Okay, so end of the month it happened. This is the purple. Then we had $2 billion investment. So Monday you would have been placing or selling all your shares, right? So typically you can sell all your shares this day. So perfect. And then if you want, if you're open to it, you can also place puts. That is up to you if you feel confident in puts, like believing a company is going to go down. Okay. You can place a put. And then usually in 1, 2, 3, 4 days, it hit $550. Okay. And do you guys know what the RSI is? I'll wait to make sure. I'll use ASTS. Okay. Okay. Kevin, yes. Steeler Dave, no. Okay. No problem. Perfect. So RSI is basically, in the simplest way, it tells you if a company is overvalued or undervalued. Okay. And all you need to type in is RSI. Okay. And let me go to, I want ASTS. Where's ASTS? There it is. Okay. So I want to focus on this one. Okay. So RSI, when a company gets too high up here, this 80 RSI, right? This is telling you you should sell the company. It's overvalued. When it's down here, it's telling you to buy. Okay. It's undervalued, overvalued, undervalued. Okay. So if we go back to the chart, okay, let's take a look. I got to move these and I got to hide a few things just so that way we can focus on the right things. Okay. You guys don't need to worry about all of these. Promise. Okay. Take a look. The company, here's the RSI up here. Where's the company? Way up here. Okay. RSI down here. Here's the price. Okay. Buy low, sell high. Okay. That's all you're trying to do. Does that make sense, Dave? That's all the RSI is telling us, is when it's up here, overvalued, time to sell. Down here, it's undervalued, it's time to buy. Okay. So the color coding on our candles, when you guys eventually get set up and everything, is that. It's all that's all that's telling us, is that as it gets more orange and more red, it is becoming more overvalued. Okay. As it becomes green and yellow, it's becoming more undervalued. So that's when we want to be buying stock. And that's why you will never see a buy diamond happen when it's entering a high RSI. I'll never say go chase a company. We don't chase companies. Okay. We get mad at ourselves for not taking advantage of this buy diamond. Okay. But we don't go, oh man, let me revenge and buy it back. Like, that's not what we're doing. Okay. So RSI is just telling us when something is undervalued and overvalued. You can use the moving average if you want. People like to use it as a support, a value support. So it tends to bounce off of it. But then once you lose it, it just drops. Okay. Some people like to use that. I don't use that because we use what's called a Williams percentage for momentum, which you get on your Momentum Elite indicator. Okay. You will get both of these. If you use the free version of TradingView, you don't have to pay to upgrade to use this. You will use this indicator here and this indicator, which has, this indicator has 11 indicators all in one. And that's why I did it. I didn't want people to have to pay for TradingView and pay for our membership to have everything. Okay. So that was the goal. Keep it as minimal payment as possible. Yeah, typically they say like buy 20 or lower, I think, but it depends. Some companies are just super bullish, so they don't always go down that low. But if you use the indicator, but yeah, typically 30-70, but I think it's 80-20 is what most people like to actually use. So once it's close to 20, go ahead and start buying it up. Once it, yeah, so everything I just showed you, the WAP, the bots, the training, the live streams are for everyone. And the indicator right now until the end of March is part of this Founders Club right here. Oh, sorry, you can't see that. Let me, I'm like, yeah, it's right here. Duh, look. No, I'm just kidding. Founders Club right here. You can see at the top of the Discord, it's an event, or on the WAP if you go to it. It's $20 a month. Founders Club gains access to everything going forward, everything now, everything going forward, and your price of $20 a month will never increase on you. There is also an annual choice if you want, which does save you 1 month. So instead of paying for 12 months a year, you annually would only pay one time for it. Only costs 11 months worth, or you get 12 months and you pay 11 months. However you want to say it. You save 20 bucks is all I'm trying to say if you do the annual. So yeah, that's all you pay to have all of this. Once March is up, if you're in the Founders Club, it'll never increase on you. Now I can look because we've ran into a few problems, I guess, where WAP, because WAP is doing a lot of updates. So now all of a sudden the banks sometimes are saying like, hey, is this fraud, or is this a safe site, and people don't respond to their bank and therefore it cancels and then your membership cancels. If I see that's the case, I have no problem reinstating the Founders Club. I'm not like a jerk, a dick, whatever you want to call it. Like I'll reinstate it. I understand what happened. But if you don't sign up for the Founders Club and you wait until after March, the membership is going to be $50 a month. Okay. So Founders Club by far is going to be the best deal out there, and the deal will never be opened again because I want to reward those that support me early on, and that's the goal. Support those that support me. So yeah, and there's a lifetime, but I think actually for the Founders Club it doesn't make sense. To be honest, I don't think it makes sense for lifetime, but that's up to you guys. And then I'm trying to think. Momentum. Okay. How this indicator works is a MACD. Have you guys who used a MACD before? Awesome, Jin. I'm so happy you're here. We haven't talked in a while. You never understood it. That's great. Okay. We're gonna make it easy as can be for you. Okay. Well, MACD is a great tool. Okay. And I'm gonna not use this one. I'm gonna use the real MACD to start. Okay. It's very similar to an RSI. Okay. Let me move this and move this up. Okay. So when we cross, okay. All it is the smoothing of moving averages ultimately with momentum. So moving averages and momentum into one. Okay. And you can see when this, every one of them's different, but when this crosses, this purple crosses over the orange, okay, you can see it happens right here. We go up. And then when it crosses down, okay, here, we go down. We buy here, cross, we go up. It never crossed back over. It bounces on it a couple times, and then eventually it crossed down right here. Boom. And then now it's crossed, and now we could buy again in this range, and we're slowly going up. Okay. So again, the terminology can work for almost every indicator. Buy low, sell high, right? Correct. Bearish and bullish. So we have this momentum elite indicator that you guys will have access to has 3 different momentums all in one indicator. Okay. So I don't want you guys to get too confused with it, but the MACD, okay, is these lines. Okay. But I use in my momentum elite, we use a quicker response because sometimes this delay here, you can see it crossed here for us on this diamond right here. This is when it crossed. This crossed on this big day. So you're late. You're late to the party. Okay. And sometimes we might get in the party a little early, but we kind of have a couple things to pair it with, so it's okay, right? We get the diamond, we see a little cross early, that's okay. This lags. That's why I have it though, for me to see, for like when I'm looking, and you guys can always ask me, I look at it because this one lags, so I have a better understanding of like how much time do we have before the move, right? But it lags so much that if you were waiting for this cross, you missed potential that move, right? We're buying somewhere at 84 and then it went to 108. This is now telling you to buy somewhere on the day it went to 108. So I don't like the lag so much, but I like to reference the lag just to like kind of see what, where's the lag trend happening. So how this momentum elite works, okay? These lines are the MACD. That's all that is. The lines are the MACD. So again, crossed up here, can get out. Cross down here, can get in, right? Now, the stochastic, this little histogram, sorry, I don't know why I said stochastic. This histogram is a different type of momentum, okay? These are how the diamonds generate, is based on this histogram here. Okay, so you can see when this flipped green, okay, this diamond populated. Okay, sorry, I'm looking down here because this is where the chat is, so I can see if you guys have questions. So I can see, let me zoom in here. Okay, we can see that this is trending bullish, right? We're trending towards flipping bullish. Okay, now you can do it there's a lot of ways you can do it, but you can see also that bearish momentum tends to hit a roadblock also right here. Okay. Typically when momentum comes down, bearish momentum, it doesn't come down much further than that line. So anytime we've hit this line, okay, so right here, bearish momentum hit this bottom, okay, this is going to be the most violent drop we have. You should probably see some sort of rebound from there, right? And sure enough, we saw a rebound, came and retested this trend line resistance, and then we fell down one more, okay? So it's good to see where we should see, because when you see a deep drop, right, a 10, 12% day, right, typically the next day will be a rebound of some sort, and you can play those. Not saying that's part of the strategy. I'm just trying to show you how you can use it. The other part of the momentum, okay, besides this histogram flipping green, is these green labels and red labels. Have you guys ever worked with divergences? Bearish and bullish divergence? Or know what it means? Okay. So, bullish and bearish divergence, okay? When our indicators, let me find one that has been happening. SoFi? I think SoFi's been on this. Yeah. Okay. Bullish divergence. This is saying that the stock is bullish. Okay. Even though the price action does not say it, it is bullish. Okay, meaning the momentum, right? This MACD is going up, right? Overall, it's going up. What is the price doing? The price is going down. Okay, stocks tend to follow divergence. Sometimes they lag the divergence, but most of the time it happens. So, same thing happening here. We saw momentum is bearish, yet this is going up. Okay, so the red flag came in on this day right here. Bearish divergence, but the stock is going up. And guess what happened? It came down. Now here's bullish divergence, yet the stock was going down. Bullish divergence because the momentum was going up, and then it popped up. So there's three momentums. We have our histogram, which generates our diamonds. Okay. Again, when we're under a certain EMA, we switch to weekly, so you don't buy all of these diamonds. Okay, but let me go to a different one. ASTS. Bearish. Okay, everyone's like, oh, it's going to go higher. It's going to go higher. Well, we had this bearish divergence populate, and we got the heck out of Dodge. We sold at 117 ASTS. Okay, we got the heck out, and sure enough, one day pop. Sure, I'll miss a day, but I'm not going to stay for this drop, which we got out. So these little bullish and bearish divergences, you will get these to populate, and you will see shortly after them the price action go in the direction that this says. So this says bullish, so therefore we saw some price action happen. We see bearish, sure enough, even though the price isn't showing it, it will. Just give it a second. Same thing here, bearish divergence, right? Price was going up and then it dropped. Okay, so you get all three of these. You get the MACD. This generates the diamonds. Okay, but it tells you where the momentum is heading. We can show up another one, I'm sure. Where's HIMS? Okay, we saw overall bullet. Look at price is going down. Price is going down. Just give it a sec. Okay, and then we got the divergence populating. Price was going down. We found the bottom. Bearish divergence, or now we're bearish MACD crossing, which we are going to go fill the gap. Okay, so HIMS, I believe, will come down touch 20 before we go the next leg higher to resist this like 34 range. So yeah, you get all three into one. If you have the free version, it's to use this histogram is the idea. Okay, and it changes for the weekly. So now you can see with the weekly. The daily on HIMS, bearish. Weekly, we're bullish. Crossover, curling, going green, right? You can see everything's going in the right direction for us now. Correct. Yep. TradingView allows you two indicators, okay, to use, and why I made the Master Elite and Momentum Elite the two indicators is because the Momentum Elite gives you three different momentums all in one, and then this Master Elite one gives you, okay, a lot. Let's go. We can go through it all, but let's see here. Okay, let's go through them real quick. Okay, when you set it up, the color coding is the RSI. Okay, when it becomes green, it's super undervalued. You're in the buy zone. If you look at the legend, you'll have it, but you can hide the legend. But you can see purple is sell all, red, you are in the sell zone, light red, you're entering a sell zone, orange, you're in the trim zone, gray candles is neutral. You're not overvalued or undervalued, so choose wisely. Okay, you get the yellow, which means add. Okay, green means buy, light green means entering the buy zone. So just follow the colors. That just means what zone you're in. So when people go right now, right, like this, hey, Colby, should I be buying HIMS? No, you shouldn't be buying HIMS. Just give it a sec, okay? And then you'll get an opportunity in this zone to be buying, right? It's not only does it help you try to make money, but it also stops you from trying to like lose money by chasing something, okay? So you're going to have access to this. And then you have, and it's up to you how you follow the diamonds, but I typically would say every yellow diamond is like 10% of your position. Like if you want to buy $10,000 worth of HIMS, a yellow diamond, you'd buy $1,000 worth of HIMS on that diamond. Okay. A green diamond, I would probably buy 25% of my position. Okay. And then a weekly diamond, because they do not happen very often. Okay. Like last time HIMS got a weekly diamond was down here back in October 30th for $5 or $6. Okay, so they don't happen very often. Typically, I like to actually double down and do a heftier chunk on the weeklies. So up to you on percentages of how you want to manage that, but um, so we'll keep going through the indicator. I won't talk about the strategy too much right now, but so you have a legend that tells you how the color coding works and how the diamonds work. Because here's the top part, the legend: green diamond buy, yellow add, orange trim, red is like sell. So it's not sell all, right? Sell 25%. Okay, purple is sell all, get out. Okay, so there's that. Now here are some labels. Okay, let me go to the daily time frame. Okay. What I will say, these labels are not telling you to do any action. The labels, okay, because the diamonds are more the momentum actions we want to take. The labels identify places where people tend to step in and you need to be ready. Oh, man, need to be ready to make a move. Okay. Doesn't mean do the move, it just says be ready to make the move. Okay. So, for example, okay, typically on this day, or this type, whatever the criteria is, on this day, we would typically see people start to add or do CSPs, cash secured puts, for the wheel strategy. Let me zoom in for you guys. Okay. Typically on this day, you would see that. Sure enough, then we get a diamond, and we get a diamond, and you can go ahead and follow those, right? Because this is people buying and stepping in. Diamond confirmations. Okay. Okay. We didn't hit low enough where people start to add here, but now we did. Here's the low enough add. Boom, boom. And we go up. We trim 4 times. Okay. Typically, people start to add in CSP in this area. Sure enough, that's what they did. Okay. Typically, people like to trim here. Sure enough, there's our bearish momentum diamond, and they did. People tend to trim. We didn't get a diamond yet. We did get a diamond on this day, and we got a diamond on this day. So you could sell and sell some more. Sell 25%, sell another 25%, and now you get to add more down here. Okay? So that's how that works. Trim, people start to trim up here. Diamond confirms it. Go ahead and trim. You'll get another opportunity. Okay? Yeah, our subscription is cheaper than TradingView, I do believe. That's why I did it. That's why unfortunately, it's hard to get the message across to people, right? Like, sign up for this and you don't need to pay for TradingView and you get more. Yeah. I mean, you see it. So it's just you got to get the people in front of you, right? So that's what the labels mean. They don't mean do it. They just mean this is typically when people tend to start to jump into buy. And it ran up a little bit. But obviously, HIMS was getting hammered and hammered and hammered. Okay. So people tend to buy. We did move up a little bit. Okay. It works. But that's all these labels are telling you. It tends to be a spot where people tend to trim or do a covered call. Trim or covered call. Trim or covered call. Sell. Okay. Diamonds are confirmation that the momentum is heading the other way. Okay. And again, it can continue to go, but our job is to take profits. Okay. I'm never mad taking my profits. Even if it kept going, it's okay. I won. I don't want to walk away and being like, man, I lost a lot. No, that's not what I want to walk away with. Okay. Oh, I could have made more. Absolutely. But I definitely made enough. Okay. I don't need to become rich overnight. Anyone who says they have the method to become rich overnight is selling the scam. Okay. I'm not trying to say you're going to get rich overnight. That is what the labels mean. Okay. Now, running the wheel strategy, you need a Bollinger Band. Okay. That is how the wheel strategy is ran for most people. Bollinger Band. Okay. Well, with TradingView, you can't use a Bollinger Band if you're using our 2 indicators. Therefore, we added a Bollinger Band. Okay. Which is just a rubber band. That's how I treat it. That's how it is. It's a rubber band. Let's go to ASTS. I use ASTS because it's like the perfect example of everything. But you'll see, right? Bouncing on the bottom, bounces, come up, bounce off, bottom, trend up alongside of it. Okay. So it's just a rubber band. So when you're down here at the bottom of the band, and we'll add moving averages and it gets even better, but just the band alone, bottom of the band, CSPs. And if we add labels, I'm sure we can maybe get some. Okay. Bottom of the band, CSP zone, CSP, run a cash secured put or just buy some. Or if you run the strategy, you do a CSP that day with the premium you got, whatever the premium is, just say $2,000, you buy $2,000 worth of shares. And now you just had your premium, right? $2,000 have a huge gain because you bought some shares with it and you use capital you didn't even have in the beginning. So, but yeah, CSP here, covered calls up here, goes down. You can buy some more covered calls or trim. Up to you if you want to do the trimming or covered calls aspect of it, but that's what these labels are for. So when it's at the top of the band, it's covered calls, covered call, covered call, covered call, CSP, covered call, covered call. Okay, that's how that works. I'm looking at the text, waiting for Kevin's message. Cool, no worries, Kev. I appreciate you coming by. And if you have any questions further, just go ahead and send me a message or put it in the chat, whatever works. How I typically will follow, let me go back to him so you can see it. Okay, I do not do daily time frame. No more than 45 days. 45 the rule of thumb, 45 days or less, 30 delta. Or wherever the Bollinger Band, whatever one is the safest route. Okay, so if the Bollinger Band said 20 strike, but the 30 delta was 19, okay, you'd go 19 because that's the 30 delta. If the Bollinger Band was 19 and 30 delta was 20, you would still do the 19. It's a safer play. I don't normally do weeklies. Now, what I was showing people is that I do monthlies, but I will take and close my profit for the monthly weekly. And I can show you that on my spreadsheet. But so I have this bull bear line. When the stock crosses below this bull bear line, I switch to the weekly time frame. Okay, I don't do the daily time frame. Okay, yeah. So that's the part is like I don't need to do the weeklies and cause myself the stress. Even though like you can make more, it's more to manage. It's more stressful and you give yourself less time for the market to dance around and do what the market's going to do. When if I take the 30 day, I can then close it in 7 if we have a huge run up. I don't know, I haven't done the math on like, you know, how the premium difference would be, but I don't want to have to think I have to look at it every day of the week to manage this weekly CSP or covered call. I rather just allow time and let the market do its thing and be okay with it. I'm okay with 3% return and selling my stock for, 20% gain, Like I don't want to I don't want to stress about the week. Like right now, if I had weeklies for next week, I set them on Friday for next week, and all of a sudden we saw crypto last night or whatever dumping, like I would now be stressing. But now I'm like, I have all my CSPs and covered calls for April 17th. Okay. We got like 30 days to figure all this out, guys. I'm not going to stress, and I can roll. I give myself more time. So, but I understand people do weeklies. I just don't want to have to stress. I rather just do 30 days and then close it out if we get a run up in a week. That's how I do it. But yeah, when you are below this, we switch to weekly time frame. Because you can see daily diamonds will start populating like crazy when you are below this line. But when you are below that line, you switch to weekly, you only get 1 diamond. And this was when you would have bought on this week. Well, it gave you the alert that week. You wait till the week that it closes. And then the following week, you wait for a good entry point. So that's why I have this bull bear line. Again, all strategies are never going to be perfect, but we take the majority for sure wins. And then you have active trend lines. So, like a lot of people don't like drawing trend lines, and it's hard. It's hard to, because it's all opinions, you know. This is a good touch point, this is a good touch point, and you're like, well, this could also be a touch point, and I'm like, this is so opinionated. So it's tough. So we do have AI trend lines, okay. I don't know a good one that's currently in one, but we can go ASTS, okay. So typically, right, you would see that this could be a trend line, touch, touch, and touch. This could be a trend line, touch, touch, and touch right here, this one. And without having to actually think about how to chart something, we can go ahead and say, show me the active trend lines. There you go. There's your active trend lines. So if you lose this support on this trend line right here, you can expect it to fall down here. I think the previous trend line should show that spot. There's the previous trend line. Boom, boom, boom. If it falls, it should fall down to here. Okay. So you have trend lines without having to chart. So now I can click on any company and it'll just populate some trend lines. I think I drew this one. I drew something. Which one did I draw? Not that one. Did I draw this one? Yeah, I drew that one. Okay. So there you go. And this is why I don't want to risk Rocket Lab, is because if it loses this support that it's on right now with this trend line and Monday's not good, like it can fall a lot more. And this is where I want to be buying Rocket Lab. Okay. So the trend lines are there, auto populate, so you can see where a good trend support is. Okay. And then on top of that, finding that, you have automatic support and resistance levels. Yeah, absolutely. We can do Microsoft. So, but resistance, support. Where's the next support? Okay. Support's down here. It even might bounce here just like this did before. So you might have some support here, but the main support level is 50. Okay. So nice and easy. If you want to see the labels, there's your labels. Here's some good buying support, and the next leg down support is here. So you don't need to learn to chart. That's the fun part, right? I would think that you can look and say, okay, 70, 40, oh man, that's a big drop. It's not worth the risk, right? So that's the fun part. And then you have all these moving averages. I typically like this one. I like all of these, but this one is the one for sure you should keep and use. Okay. Because this is how far something could drop. You might say it's crazy, but it's not crazy, because we're going to look at Microsoft. Yeah, you can click all the indicators. They can all be on all at once, and you can see it all. And it auto does everything for you. So Microsoft. There you go. Next support would be in the 360s range. Okay, this red line, this is what I meant by any stock can see this red line. You saw how far Microsoft was from it, or Microsoft Rocket Lab was from it. Well, when Microsoft is below this red line, never sell the stock, okay? Just hold if you are at this current point, okay? And every time has been a great time to buy Microsoft. Back in 2013, back in 2009, back in November of 2022, back in April of 2025. And now we're here in April of 2026 or March of 2026. Okay. So the 200 weekly moving average is a very good moving average to understand how far you could fall. Okay. For example, the one I'm bullish on, SoFi. Everyone up here, oh, it's going to 45. It's going to 45. Well, how about we check that this is all the way down to 15 and pump the brakes on buying the company up here, right? Pump the brakes. Okay. So you got to always understand how far your company could fall based on this 200 weekly, and you want to be buying constantly when it's close to this 200 weekly moving average. Okay. Those are just amazing buy levels. You can do the 200 daily. Okay, your average on SoFi is 21. Long term, don't stress about it. I don't know how much you have. Are you full on your allocation? What's your where are you at with it? Microsoft. Let me go back to Microsoft for you. I'm a SoFi bull, so. Dang, good chunk of SoFi too. Did you buy it before it went to 32? Like you bought it on the way up at 21, or you bought it recently on the way down? Both. Okay. Um, I am loading up anywhere from 18 and down. So, okay, you started buying at 25. Got it. I was gonna say buying at where you did wasn't a bad idea. But you don't. Do you run the covered calls and stuff in that account? I think you said you do, right? Oh, you can't. That's right. So it doesn't matter. You just gotta hold it, right? I'm convinced SoFi is going to be my Bank of America for Warren Buffett. Like I'm just going to hold it, and it's going to eventually pay me so many dividends because every bank eventually does pay dividends, and we're gonna be Warren Buffett's one day. And I'll go back over SoFi in just a sec. But you got trend lines, you got all your moving averages, and then you have year-to-date VWAP, which is volume-weighted average price. Okay, and that tends to act as a support and resistance level a lot of the times. And we'll take a look at it right now. It'll be purple line. Okay, let me move these other lines out of here. Okay, and let me go, we can go to a lot of them. We've been crushing it. Navitas has been fun. Where is I just was on one that was like, oh man, it just rejected it. I don't think it was Hims, but maybe it was. Oh, well, it broke through and then it came down, touching it, but it does act like a good strong support and resistance. Like this is all the way up here at 750. So Archer, where's SoFi's? SoFi could come up a good chunk back to 21.30. Which that's what I've been waiting for. I've been waiting for the bounce to 25. Before I think it's still going to go to 25, but maybe it's just going to go to 21. I'm going to set a covered call then, because I think then it goes back down again one more leg. We'll see. But SoFi I'm bullish. I'm just loading up right now like crazy as much as I can on SoFi. But yeah, it's just another. Here's resistance. Year to date was bullish, came down below it. It's bearish, and it keeps rejecting it. This year-to-date VWAP. So it's just another one to see based on year-to-date, the average volume price. So you can just kind of see where it should be. And then, like I said, support resistance. So you get all that in one indicator. And then you have the Momentum Elite indicator, which would be this one. Let me close that. Which would be this one, which gives you the MACD, gives you the histogram for the diamond, so you can get an idea when a diamond is about to populate. And like I say, I tend to ignore gray diamonds or gray candles actions because it's neutral. Well, I'm not buying it undervalued and I'm not selling it undervalued, or overvalued. So it's just neutral. So like, I don't know, it's just not a great price to do anything. So I ignore gray candles. So SoFi, yeah. I love me some SoFi. So this is what I would say. You can see, we go to the weekly because we crossed. Where's the bull bear line? Okay. We crossed it. We're down below it. So therefore, we switch to the weekly time frame. Okay. We see that this is starting to curl. We see momentum is starting to trend upwards. We see we're sitting on a key support. Okay. All these things are kind of adding up to like, okay, we should start accumulating some at this level. Okay. If we take a look, this is the momentum that the histogram is displaying. Okay. Basically, when this bar is red, that means this purple line just got further from the moving average. Okay. Do you see that? Like, this is showing that this purple line is getting further away downward from that moving average. And then when it crossed above this white line, it flipped green. And then it got further away positive on here. So that's all this histogram is showing this, but in a histogram form, because I can't put these lines and the MACD lines and they'd just be like crossing and no one would know what the hell they're looking at. So if you take a look, and if you have, you can, if you want, you can use this one instead of this, but you're only going to see the momentum histogram side of things. But let's take a look at what's happened in the past with SoFi. Okay. Every time this white moving average has come down to this green level, that's what I call a momentum reset. Okay. The momentum has reset. The momentum moving average has now fully came down and reset at the green line. Well, that happened here in July of 2024, and that happened here in January of 2023 when the company was 450 and the company was 650. Okay, and now we're finally getting that opportunity again where this momentum is about to reset. So it just looks like a little bit, a week or two maybe, but for it to fully reset. But also MACD bottom. Okay, it wasn't fully even as low as it is now. Here's the MACD then. Just it's still even lower than it was there. So I think we're setting up for a bigger move than we have in the past. So pretty excited for it. Okay, we can look at a bunch of them. Here's him, same thing. Momentum, fully waiting, and then the purple finally crossed. The last time was back in November of 2023 for 589. Okay. ONDS, since everyone likes to talk about that one, was back here, back in May of 2025 when the company was 80 cents. Okay. Reset here, company was 80 cents, and then eventually got some sells up here in the 250s. Okay. So that's all these diamonds are off of momentum. They're crossing over, but the only time I want us to buy bullish momentum is when a company is undervalued. I don't care, like here, right? Like this says we cross bullish. Well, the company was $10. Yes, it went higher to 14, but the downside is severely risky. So I don't want people to take that risk. That doesn't make sense. Don't do it, right? Buy low, sell high. So yeah, that's how that works. Any questions? Yeah, I prefer less risk. For sure. Can things still go down? Absolutely. But you buy companies you believe in long term, then there's no problem if it goes down in the short term. So as long as you dollar cost average in on diamonds, you'll be fine. I can show back test, I think, on here. Let me see. It'll always, and okay, and I don't trade companies that are new to the market. Okay. I want 3 years of history for me to entertain a company. Okay. So we can go to SoFi. Okay. And we'll go to the strategy. There you go. 28 wins, 1 loss. Okay. 28 wins, 1 loss. Okay. Again, it counts gray candles. I can't get the coding to XNAY gray candles, but we'll take 28 wins and 1 loss. Yeah, that one will loss. Well, let's take a look at that 1 loss. It'll give me all the trades. Okay. So where's the 1 loss we took? It was a 0.5% loss. The ones in the beginning are the current positions because it bought these diamonds, which in our group, I was telling people not to buy these diamonds. One, this diamond was gray, so we don't buy it. This one came on earnings, which was amazing earnings and up 6% and then dropped 10%, whatever. And I said, don't buy it, okay? Because the market conditions, if they put out that good of earnings and we're red today, we're going to go down further, okay? So just don't. Our indicator momentum, but our MACD, right? If you look at the MACD, hold on, let me pull it up so you can understand too, right? Where's the diamond here? Okay, so let me put a purple line so we can zoom in on the MACD. Okay, because you want both things to happen. You want the curling of a MACD and a diamond. Okay, so a diamond came in on this day, earnings. Okay, So now let's zoom in on the MACD. Where'd it go? There it is. Get rid of the circle. Okay. Momentum flip because we had a huge boost. We 6% early in the morning, right? That's profit loss for everyone, question mark, or just you? That's so the are you talking about the strategy and it showing like a 0.5% loss? Is that what you're talking about? So that's just back testing. So if you buy, it's showing you buying and selling on every diamond that populates. And that's what the results were. Not specifically what I did. It's just showing you if you followed this blindly and just did the diamonds and didn't care about anything else and didn't know a single thing and only knew how to hit a buy and sell button, you would have 28 wins and 1 loss. Okay. But here's the day that on earnings it said to buy because the momentum of earnings carried it. Okay. Well, here you go. Does the MACD show anything about curling at any point? I don't see any curl. Right? So I'm not buying it. Okay. I'm waiting for curling to happen for a buying opportunity. Okay. So, and now we're under the blue line. So now we're waiting for the weekly. So we go to the weekly. Okay. Now you can see some curling happening. You can see that this is starting to curl. Okay. Now we wait for the diamond to populate when that curl happens, and then we can get into it. But you want to see curling with the MACD and the diamond. If you can get both of those to happen, it's a great opportunity. Okay. And I know in the other group they're big in Navitas, right? So you can see, right? Here's the curling happening. Okay. You see slight curling happening before that diamond happens, right? This flip green, this curling was already happening. We want to see curling and green. We want both to be happening, curling and green. Yes, I do. You'll see all my buys and sells. Again, it's just a personal journal. I sometimes can take more risk. But ultimately, if you have a company you prefer, you can look at the diamonds and be able to do it. Okay. But yeah, if you look at Navitas, I mean, look at it's just been buy, trim, sell, add, trim, buy, trim, add. Any point we sold Navitas up here because we were hitting this resistance where these previous trims happened, and we saw that the market was like shaky, and we're just like, yeah, I'm just gonna take my win. Like I'm not scared of missing out on things because I know a win is a win. Everyone else is terrified. So you, which companies? June. Which companies? I don't know what Navitas history is, to be honest, on this. Navitas, 14 trades, 1 loss, or 15 trades, 1 loss also. Oh, I saw the oracles in that chat. Yeah. I don't mess with dark pool. I love Microsoft, but okay. Yeah. Yeah. The thing with dark pool, again, I'm not going to bash anyone. But at least to my knowledge, dark pool is you don't know which way the transactions are happening. At least that's my understanding. Maybe you do. Maybe he's got something I don't. But to my knowledge, I thought dark pool was like you see the transaction happening, but you don't know if it was a buy or a sell. But maybe I'm crazy. Maybe I'm dumb. No, I look for just true opportunities. I was fortunate enough to dig my way out of April of last year, meaning not that I dug my way out, I just held, and obviously everything recovered, so I was okay, but I was heavy in options. Not the wheel strategy options, long calls like you have. Okay. I'm kind of gone away from long calls. Yeah. I'm just going to leave that there. You and I think the same thing right now, probably based on the statement you just made. Um, but what I will say is, I'm more of a fan of. Says yours a shot. Yeah. Again. I'll move from the topic. I understand. Yes. Um, what I will say is, I prefer to keep the money I have and only give myself the best opportunity to grow. And I don't expect to grow overnight, of course. I don't want anyone to think that you're going to get rich quick. It's Investing is not get rich quick. Warren Buffett was not get rich quick. It wasn't the one trade made him at all, right? It was years of compounding, staying consistent, buying companies when they're undervalued, and he doesn't play the option game. We don't really play the option game. All the options we do are to buy shares and to sell shares. But they don't have an expiration date to lose all my money like long calls do. Now, can you obviously with long calls use less capital to generate more outcome? Absolutely. And there is a time and place for it. For me, with your guys' long calls that you guys are currently in, right? For me, there I would only do long calls, and I don't do even short-term long calls. I do leaps. I do January 2028. January 2027 would be like the shortest I would do right now. Um, and that's because I want the best opportunity for my money to grow without losing it. Also, I don't want to like your losses take a long time to get back. It sucks. I'm waiting for your message. I basically got lucky back 2016. This comes down from 60, split 3 times. Yeah, which looks like it was just a buy and hold, right? Typically, and that's why, like in our group, it almost feels like my job for the most part is to make sure everyone stays calm. Do not panic. Do not run to the hills. Do not just give up your money. Okay. Because again, and I'll reference him because he's one of the greatest investors of all time, or the greatest, Warren Buffett. He's been asked many times, oh, in 2008, 2009, how much did you lose? Nothing. I didn't lose. I didn't sell. I didn't lose. I just have to give up a little bit more of my time. Okay. Well, I have time, right? We have time. So don't just go giving up money because you're trying to time something. Like, don't try to time it. So all I'm trying to do is buy stock at a good price, get paid to buy the stock, and that's it. There's not a whole lot more to it. Okay. Um, 1 sec. 1 sec. 2 seconds. I started smelling a candle, and I thought something caught fire. So I was like, let me go check on that. So last year, open book. I think I posted it in the Discord as well. Here is, hold on, profits. I posted it somewhere just so you can see. Here's 2025 performance. Our total portfolio was 108% year to date for 2025. I think that's pretty good. Again, other people might do better. I don't know. I'm happy with 108%. Here is our big ones, obviously, ASTS and Rocket Lab and SoFi. here's CSP profits last week, I think, making a nice 12% last week. Thank you. I wasn't sure. I've like this is our first year of like truly being transparent and with a community. Really, this like I started this in January. Okay. So I don't know a whole lot of where people are in life. And that's the biggest concern, I think, for a lot of people is they don't know where other people are in life to know if they're on track or not on track. And therefore, because we all think that we are behind, we feel the need to make risky decisions that can actually set us further behind because we all feel like we're behind. So if we can get that stigma out of our like in our community and just support each other and saying like you're killing it, you're doing great, and have that positivity and not feel like everyone is behind in life or behind in their portfolio, like we will stop each other from making poor decisions in the market. And that's why I say tell people like take your small gains, because constantly taking a 5% gain, 10% gain quickly stacks to 100% gain. You don't have to be right one big chunk. Be right a bunch of small times and it adds up. So that's what we go for. We go for the low-hanging fruit. Go for the low-hanging fruit. Typically becomes some of the biggest returns. Like one guy in the community, he's everyone's gung-ho about Oscar, and people tricked me into getting into Oscar, and I kind of want out, but I'm gonna let Oscar prove what they gave guidance on. So if they can prove guidance, then it's a hell of a play, and I'm super happy. But if they can't prove the guidance they gave, it'll be trouble. But someone in our community, he's like, I hate Oscar, I hate it. And I go, what was your biggest winner last year? And he goes, Oscar. I go, and you hate the company? He goes, well, actually, my biggest gain last year was a bunch of CSPs on Oscar and covered calls. And the stock I actually made was like pretty flat. He's like, I just kind of made premium the whole time, and I made the most money on that stock. That's the fun part. We don't need the stock to go anywhere. We actually prefer the stock just chop a bunch and do this and sell CSPs and covered calls constantly, and you'll get to 100% return. You don't have to have the stock go 100% to return itself. We'll do it. We'll make it. So that's the fun part. We don't care what the market does. And that's the tough part. You're going to learn really quick is that when you have the full wheel strategy going, okay? I'd have the diagram. Once you have this full strategy going right here, step 1, cash secured puts, and then both times. So like at the same time you have cash secured puts and at the same time you have covered calls, and then all of a sudden it's a red day, you're like, I'm making money. And then the green days go up and you're like, I'm making money. Either way the market goes, your account is making money. So it's really tough to be like, oh man, I think I want a green day today, but I'm also not mad if it's red. Like it gets really weird. Like I had a bunch of cash and I was like, I need some red days. Friday came, I'm like, oh, red day. And everyone else in the market for the most part is like, oh, I just want green. We need to get back going. We need to keep going up. And I'm like, I kind of want a better opportunity. And we kind of changed our mindsets in the market in our community as well, that stop looking at red days as you're losing money, because you're not losing money unless you're in options, unless you're in your options that are losing money. But overall for our community, we're not heavy into in those kind of options where they can expire worthless. And stop looking at it as losing money today, because 1, you didn't sell the stock, so you didn't lose. And 2, if you were happy buying the stock before, you should be ecstatic to buy the stock now for cheaper, better opportunity in the market, right? Obviously your 401k might be restricted on capital to invest, but for example, you're willing to buy SoFi at 25, so you're definitely happy buying it for 18, and now it's 16. You definitely should be happier to buy it for 16. You didn't lose at the 25 because you thought it was a good investment then, so it should go higher in your mind. So buying it at 16 now is a hell of a gift. So you got to change the mindset, because long term is the goal. Long term is the mindset we go into it. And then if opportunities happen inside of that long-term outlook, we're going to take advantage of it. But overall, long-term mindset, and we have no problem. We're good. I'll keep rambling. But you're more than welcome to ask questions and throw me off or throw me into a different category. We'll go into it. This is all recorded, so whoever's going to watch it back is going to have a long live stream to watch. You can fast forward. Hi, if you're at this point. But we can look. I meant to look at your options here. Oracle. And let's go to the monthly time frame, I think. Let me get rid of this. Weekly. All right, there we go. So here's our weekly. This is the part where, yeah, hopefully in a week or two, so if I find support, we'll buy more and get the average down. Yeah, my big buy. I'm not buying any more. I say that, but it's so hard not to. But 1550 is my number. 1550. That's going to be my final. Well, my final buy outright, unless we saw 1275. Then that would be my next buy, which I don't think will happen. But if it did, that would be my next buy. And I would probably take a loan out. And I would buy as much as I possibly can. So as far as Oracle goes, we got a weekly momentum bullish. Okay. So we got this diamond here. We got the MACD curl. Okay. Let's see what the lagged MACD looks like. Okay. It's curling. So I think what's your strike price on Oracle? Oh God. 300. What's your premium? Or what'd you pay for those contracts? I can't even imagine what that would be. If you don't know, that's okay. You don't have to look. Okay, 226. Okay, so if we take a look at this one too, you can see we broke out and now we're back testing this moving average here. So hopefully it goes down, back test, and then up. Okay, so that's good. We have the MACD, the lagged MACD curling, and we have the faster MACD crossed. Okay, so my assumption, the bottom is in. That's how I would view this. Stochastic is curling. And what's our volume? Our volume is green, but it hasn't done a whole lot as far as trending back to positive. So I do think the bottom is in for Oracle. I don't know at what pace, though, you're going to get back to yours. So your average is 226. Okay. I'm going to look at what it currently is going for off screen for you, or for me. Let's see, Oracle. What month did you have? You had June. Yeah, you definitely would. I'm sure they're already significantly beat down June 18th. So it obviously doesn't make sense just to close it and take what you have, I'm assuming. 300. Oh, yeah, you definitely not worth selling. Okay. Yeah, I at that point you just kind of need a miracle for June. Because I imagine that it's not a whole lot worth saving as far as like the premium that's left. You might as well just let it ride and hopefully you see a big recovery. Which you do have momentum on your side. Microsoft. Okay. Same date, same kind of far strike. Yeah, see, you don't have momentum on your side yet. It hasn't crossed. and given us a weekly diamond yet, but it is coming up. Stochastics here. That's why I've been telling people, like, now at this pricing is the time to be buying Microsoft. Anytime this Microsoft has been the key buying has been here, these red lines. So, like, the problem Ivan and I have, my portfolio is not too big, so I can't, like, load up on Microsoft. It just takes up too much capital. I can't make enough to grow fast enough. What you said 520? Oh my god. What dark pool was he looking at? What was the price when you guys what was the price when you bought these? If you remember, you don't have to. October. Oh, right at the all-time right at the all-time highs. Got it. Well, this is the fun part about our indicator. Okay. Was that October was clearly for us. August, July, August, September, October. All selling, no buying. Okay. So, and this was a gray diamond, so I wouldn't do that. So you would have had one buy potentially at 475 with our diamonds, and then you wouldn't have bought still yet to average down the next time. Okay. So we would have bought, following the strategy, we would have bought 10% or something in this range, which was on support. And then obviously we just had macros, and now we're just waiting on the weekly diamond to average down. Well, you're here now. We'll recoup. Okay. There is a trade that we do that for risking money. We do, I don't know, have you ever done like debit spreads, call debit spreads or anything like that? I'm kind of new to them, so it's like, but I understand it. We're in one right now. Okay. So if I do them, I know I'm willing to lose all my money. I've never done a butterfly. I've never done an iron condor. Unless butterfly is just another term for what I just said, and then I feel dumb. Again, this isn't to you, Dave, but you'll hear it. So anyone watching the live stream recording, I'm a real human. I'm not some fake know-it-all. I think I know it. If I don't know something, I will tell you I don't know something. Okay? Okay. Well, a call debit spread, okay, is buying a leap, buying what you've bought, and then selling a covered call, which pays you premium to cut down your cost on those leaps, but you cap your upside. So it's a little bit of a, win lose, I guess. I don't know how. Well, either way, you risk less money and you make less money, but the percentage on your capital is just as good. Correct. So what we did for hymns, okay, I'm willing to lose like, I don't know, $600. Whatever, you can choose something small. But January 2028, we have one, okay, and we bought a 70 and we sold a 75. Okay, so I'm buying a 70 call. So just saying the stock needs to get over $70. It doesn't have to be on the expiration date, but it can be. So I'm buying this one, and then I'm selling a covered call. I will sell my shares for 75, but I'm buying them for 70. So I'll sell them for 75. Okay, so that 448 eats up 483. So the remaining amount is a 35-cent difference is what I pay per contract. But the 35, the max gain is 465. That is roughly a 1,200% return if HIMS is above it can happen before, but on the expiration date, if it's above $75, it's a 1,200% return. Okay. And I'm not saying lean into these kind of opportunities. No, I'm not. You do a CSP on HIMS, right? I did a CSP on HIMS. They're paying me, I don't know, $2,000. Okay. Well, I can take, let's just say, 10 contracts. I can take out of that $2,000 in premium I'm going to collect, I'll take $350 of it, and I will risk it on this play because $350 can turn into $4,600. And I believe HIMS can do that with the squeeze potential, the company's potential. It was already at this price in the past, and now things have only gotten better, yet the price hasn't. So why not, right? So I'm willing to do that. I will take some of my premium and I will put it into a risky play, but I'm not risking my initial capital that I have. I'm not going to do that. I'm going to risk some premium that I just collected, and I'm going to try to make more premium, more money with that premium. Does that make sense? Because I don't really like risking money to just lose it all on capital I currently have, but I will risk a portion of premium I collected on a play. And it's a very small amount, right? $350 to make potentially 4,600. Oh, so was somebody in the live stream? Hold on. Hold on, messaging someone. Someone had questions about ASTS. I didn't know if he was in here. I don't think it's for me anyway. It's so let's see. So, oh, gotcha. He's on. Hi, sorry I didn't see. So ASTS, I did go over some of it, but I didn't know you were in here. So let me go over it real quick. There's a lot of downside risk to ASTS, but overall long term, I'm super bullish. Okay. So if we take a look here, let's go find the moving average. I think it's the 50. Nope. Well, that's what it's currently on. So it tends to get pretty close to this 200. Okay. It's been the best buying opportunities. So understand that your risk down is 70. That's where I've been wanting to buy this company. And I've just been waiting for the opportunity and I haven't gotten back into it. And I might not get the opportunity. There's other companies out there. And if I look at the daily time frame, I do see this, like we are bullish daily, but the weekly, I think we're still bearish on the weekly time frame. So I love the company long term. I think you're going to be perfectly fine, but because this company still shows a lot of downside potential, it's not where I want my money to go at this moment. Okay, I personally would rather my money go into something like SoFi, something like HIMS, something like Archer, something like Oscar, something even like Navitas, I think. Yeah, Navitas is still on its 200-day moving average. Like the downside is very minimal compared to other opportunities out there in the market as far as where I'm putting my fresh money. Now, if you just have ASTS already with a low cost basis, then yeah, I would just continue to hold right now because you're not overvalued. You're just neutrally valued. Okay. So that's my initial thought on ASTS. Downside 70. Upside, my target I believe is still 135 to 150. So plenty of upside. Very little, I guess, downside when you think of the upside potential. But that's why I love the indicator. You can just pull up any chart when people ask, and it's pretty straightforward to kind of like quickly look at it. Thanks for being on YouTube, by the way, Tiger. You got a good support. You just don't want to lose this 80 support. My coffee got cold. See your chat, Dave. I'll go to the live stream. Of course. Yeah. Any questions come up or anything like that, I can quickly make a video and send you DM or show you how to work a setting or anything like that. So I'm here hands on, happy to help if you get stumped on anything. All right. And then if you want to also, there's the annual membership to save you an extra month. So if you want to do the annual one, you can do that one too, whatever one you prefer. So I appreciate your support. Since you are getting off, I think I've covered pretty much everything I possibly can in this live stream for everyone to understand a little bit of what we do. So I appreciate everyone. I will talk to you guys later. Enjoy the rest of your weekend. See ya.